Yes, guys, happy morning. What is that? No, Josh, happy morning. How have you been? It's been a long time. Okay. Yes, guys. So, where did we stop? Which subject? Income tax. Right. So, we had done till, I think, capital gains, correct? So, next we have couple of classes, 2-3 days, and after that, IDT will start. So, I mean, again, I'll come back. Thing is, this has to be done in parts. Only then it will be, fun and you'll understand. So we'll target is we'll finish off IFOS also. So all the heads except that salary that you leave, all the main heads of income will be over. House property, PGBP, capital gain, and IFOS also. So income from other sources. So capital gains we had done fully. There was absolutely no. I hope. Did you study? Yeah. Any doubts or any problem till now? Yeah. So we had solved a few sums also, if you remember. Right, we had done all the questions, etc. Anyway, now let's dive into income from other sources. So if this also is over, and residential status also we had done little bit. So if income from other sources also get over, then major part is over. After that, it's only fringe topics. You have only fringe topics like residential status, little bit extra, TDS, all those things. So anyway, this also will be over, guys. It's hardly anything. This and TDS if we finish, and then you only have your other things like salary and all the small topics, set off, carry forward, clubbing. All these are like very small topics. Easily we can finish. Right. Okay. Yes. So income from other sources. So write down the heading, guys. IFOS, income from other sources. Income from other sources. So in our notes also we'll check IFOS where we have. So we had done the capital gain fully, and then in IFOS you have to do concept of deemed dividend and all those things. That is what we'll do. And before that we'll have to do the other areas. It's in page 9.1. So IFOS means what? Anything other than the four heads. It is other than business, other than capital gain, other than salary, other than house property, which would include what? Gift taxation, dividend taxation, income from units, interest on securities, winnings, family pension, normal pension. Then if for example, if this is the business, one room is khali, I want to give this room on rent. Is it my business? No. Is it house property? No. I have my own business. I just, for 3 days, I will let it out to somebody else. Is it my business? No. This is called income from other sources. Then share premium of closely held company, interest on compensation, enhanced compensation, all these things. Some collected from employees, all these things we will see. So income from other sources means it's a residuary income. Any income that does not come under any other head of income will come under income from other sources. Ultimately, Nirmala madam will definitely tax everything. So first of all, she's telling it should be in the nature of income. Second, it should not be exempt. Third one, it should not be chargeable under any other head. Simple. First of all, income must be there. It must not be exempt. Because exempt income will not come into the picture at all. Yes. So these are all the various income from other sources. The dividend, winnings from lottery, issues of share, forfeiture, everything we'll discuss. But first discussion, most important, all this we will see slowly. But most important now is what we need to discuss would be the gift taxation. So write down the heading, gift taxation. All other things we'll see slowly. First only gift taxation, guys. Gift taxation. This obviously will be linking with capital gain. Gift taxation. So if you remember, Mr. A, let's say, will gift a property to Mr. B. Right, the stamp duty value of that property is 1 crore, but the full value of consideration will be 0. Why? I am giving it as a gift. A is gifting the property to Mr. B. What is A called? He's gifting. Who is he called? Transferor. Okay, that is transferor for money. If he's transferring for free, what is he called? He's called as a donor. He's called as a donor. And B is Doni, no? Doni. B is Doni. There is no word called gifter. Like one of the CA students says, sir, gifter, gifty. Gifter, gifty and all is not there. It is what? Donor and Doni. Transferor, transferring. The transferor giving it for free is called as a donor. Other guy receiving it is called as a Doni. So the donor is gifting to the Doni SDV worth 1 crore at 0 rupees. Tell me, capital gain you would have done, no? In capital gain, what will be the FVOC? Cost, no. For A is gifting. So is gift a transfer? No, we had seen that. Gift is not a transfer. So for A, there is no capital gain. That's the best part. For A, there is no capital gain. For B, he is receiving a property worth 1 crore and whenever he is selling, he will be selling it at whatever rate. He is selling it at 5 crore. And what will be the cost of acquisition for this guy? It will be whatever this guy had bought it for. So this guy had bought the asset at 50 lakh. So that same amount will be the cost of acquisition for Doni. That was, you already know this. But now, thing is, people started misusing this. So especially politicians and many other people. Rather than me taking the money, me taking the asset, it was gifted to somebody else. My driver, my servant, etc. For B, Doni, when he is receiving the gift, is there any taxation? No. See, if I receive from my parents and all, it's okay, I understand. But if I receive some random friend, if I receive from my master, if I receive from my servant, in many cases, servant and all had gifted the politician some property. He had got it through somebody else. So all these are called as Benami property. Benami means what? Not in your name. Benami, it's a Arabic word. Benam means what? Not in your name. So what is a Benami property? Something which is not in your name. Something which is there in somebody else's name is called Benami property. Now, you own, you have given the money for it, but who has kept it? Somebody else. This is called as Benami property. So, ultimately what I am trying to tell is, donor is there, Doni is taking the property at lesser value or zero in this case. So, if it is just parents, I am giving it to my dad, no problem. Giving it to my mom, no problem. Giving it to my children, no problem. But some random fellow, master giving it to servant, servant giving it to somebody else, all that I had to stop. How will I stop it? Now this cannot be changed in capital gain. Gift is not a transfer. I cannot say gift is a transfer. Gift is not a transfer. What is the other way of doing it? The other way is to tax Mr. B. So gift taxation concept came, saying that if Mr. B is receiving a gift from Mr. A, if Mr. A is a relative, no problem. That's okay. But if Mr. A is not a relative, then who has to pay tax? B has to pay tax. How much tax he has to pay? You only think. See, cost of acquisition is 50 lakh for A. SDV, stamp duty value at the time of transferring is 1 crore. You are receiving an asset which was purchased at 50 lakh, but now valued at 1 crore you are receiving from somebody who is not your relative. From somebody who is not your relative. So tell me, what do you think? Yeah, if you are Nirmala madam, you are telling B, boss, you are asking B, is A your relative? No, ma'am. So some random person you are receiving gift. Yes, ma'am. So you need to pay tax. On what amount? Ma'am, that person's cost was 50 lakh. Nirmala madam says, okay, cost is different. Did you pay any 1 rupee also? No, ma'am. Today, if you sell that property, how much will you get? 1 crore, ma'am. So please pay tax on 1 crore. So what will be the FVOC deemed SDV 1 crore? Do you understand the concept? If you receive from relative, no problem, guys. We'll see the exceptions. If you receive from relatives, no problem. That's fine. So can your father gift a property to you? Yes. Is there any tax for your father? No. Any tax for you? No. But can you transfer to your girlfriend? You can transfer, but she has to pay tax. Girlfriend is not your relative. Is the legal relationship established? No. Until there is marriage. That is why it is very important to have a legal relationship. So marriage will create that legal relationship. So until the all the procedure under the Hindu Marriage Act or the Special Marriages Act and all happen, and then you register that marriage, only then you can say that the marriage has happened. Registration is actually the key for any marriage. But for registration, they will check the wedding invitation, wedding photos, all that they'll check. So ultimately, the entire procedure only is called as being married. So what I'm trying to tell is, if you receive from any relative, no problem. But if you receive from non-relative, then it's a problem. So a huge thing was inserted. This was done by Arun Jaitley. Arun Jaitley said, enough is enough. People are doing. There was one minister called Mayawati. I don't know if you have heard. Most corrupt minister ever. I don't know where she is now. So Mayawati, she was the main culprit. Jayalalitha, Amma, right? You have that other one, Sasikala. What is the relation between Sasikala and Jayalalitha? Nothing. She's a servant actually. But you see Jayalalitha, Sasikala's assets worth crores. Was she in jail? Yes. Because of this only. Disproportionate asset. You are a servant who has no source of income, but you have property worth crores gifted by Jayalalitha. So they asked Sasikala, is Jayalalitha your relative? No. And you have declared your asset to be 10 lakhs, but you have asset worth 300 crores. That is what it is. Correct? Highly corrupt. Jayalalitha, then Sasikala, everyone. All ministers are like that only. But I'm just saying, heavy corrupt. I have nothing against or for any minister, but everything. So Jayalalitha also was in jail. Sasikala also was in jail. You would have seen. Same thing. Because here also, an Income Tax Act also, they put a case. Like, what is this? So that's why Arun Jaitley came out with gift taxation. If you are receiving anything, Sasikala receiving gift from Jayalalitha, property worth 10 crore, how much she paid for it? 0. What is the tax that Sasikala has to pay? On 10 crore. That makes sense. You pay the tax, then it's okay. It's as if you have owned it. You paid the tax. Ultimately, Nirmala madam wants the tax. She's like, assume it was not a gift. Assume you are purchasing it, from somebody else. Now that person is not paying tax, so you pay tax. Do you pay tax on purchase? Never, no. But in this case, you are paying a tax on receiving something. Weird. When will you pay tax? When you receive money. Here, what are you receiving? Property. But still you have to pay tax because other person is not paying. General rule, who will pay tax? The transferor will pay tax actually, transferor. But here transferor is the donor. Since he is not paying tax, you pay tax. So the tax is shifted in gift taxation. That's all. Tax is shifted and to also curb bad things from happening. This is immovable property. Can I give movable property? Car? Yes, I can give capital asset, normal thing, movable property I can give. Can I give immovable property? Yes. Can I give money? Yes, that is also taxed. Yes. I don't want to give this 1 crore. I will give you cash 1 crore. Take it. Is it taxable? Yes. So guys, 3 things we have guys in our thing. We have 3 things. We have money, we have immovable property, and we have others. Others will be movable property. Correct? And immovable property also, there are 2 things. Without consideration, inadequate consideration. Without consideration means what? My example, giving it for free. Inadequate consideration means what? A 1 crore property sold at 10 rupees. 1 crore property sold at 1 lakh, 2 lakhs, 3 lakhs. Inadequate consideration. Is that also taxable? Yes. And movable property. Movable property. Shares gifted free of cost. Shares worth 100 crore gifted to you free without consideration. Shares worth 100 crore sold at 10 rupees. Inadequate consideration. Is intangible asset, for example, is Like Dhoni, Mahendra Singh Dhoni sold his life story to the makers of MSD movie. Have you watched MSD movie? Yes, Sushant Singh Rajput's movie. So, is he selling an intangible asset? Yes, that's his life story. How much he sold it for? He sold it for 60 crore, actually. Now tell me, is that capital? I mean, did he gift it? No. Who has to pay the tax? Mahendra Singh Dhoni only has to pay because he's getting money, 60 crore. On the other hand, have you watched the movie called Bhag Milka Bhag? It's based on Milka Singh. Correct? Farhan Akhtar acted as Milka Singh. True story, Milka Singh gifted his life story for 1 rupee. True story. He said, I don't want any money, you take, you please use it. But one thing, you please donate to my charity, my orphanage, whenever you can, if you want, that is. Otherwise, he gifted his life story, intangible asset, for how much? He just took a token amount of 1 rupee. That movie made, let's say, that value was 50 crore, but he gifted it at 1 rupee. I gifted. Gift, is it tax or no tax? No tax for Milka Singh because he actually gifted it. But this guy, the other guy, is receiving that money, no? Receiving that gift. For him, is it taxed? Yes. At what rate? I mean, what is the thing? SDV. It is not SDV, yeah? The value of that particular movie, the intangible asset, sorry. So valuation has to be done, all that. So basically, guys, this is to curb people from doing whatever they want. Inadequate consideration means less than. Generally, in Indian Contract Act, consideration, if it's adequate or inadequate, I don't care. Contract is a contract. But in Income Tax Act, if the consideration is inadequate, for the balance amount, you have to pay tax. So if I have received something worth 1 crore at 10 lakhs, for the remaining 90 lakhs, I have to pay tax. Nirmala madam doesn't care about whether you got it free or not. She's like, you pay tax and you do whatever you want. I don't care. Right? Yeah. So let's say you go abroad and you receive some, gift, lucky dip, lucky draw. Lucky draw, you receive a car. Don't you think so, Nirmala madam will ask tax for that? Yes. She'll say, you please drive the car. I have no problem. But please pay tax and then drive the car. Right? Apart from that, you have import duty and all those things. Right? If it's a 1 crore car, you'll have to pay 1.8 crore to bring it to India. Imagine. Might as well buy here only. That is a problem. That's why no one, enters in these raffles and all those things. Anyway, guys. So this is the main thing. Did you understand? Quickly copy. So section reference and all, ignore, no problem. But yeah, just for your reference. See, 56.210 BA, 56.210 BB, 56.210 CA, like that. Only is taxable. Money, if you are receiving up to 50,000, no tax. More than 50,000 if you are receiving, then there is tax. Next question you will ask, sir, is it 50,000 per person or 50,000 all put together? All my friends paid 10, 100 rupees to me. I have 60,000 friends. I have 6,000 friends. 6,000 friends paid, 600 friends paid 100 rupees each. 60,000. Is it taxable? That we will see later. But anything more than 50,000 is taxable. Guys, important to know the taxation is on the giver or receiver? Receiver. Yes, receiver. So write down. Right. So this is how it works. Okay. So this one, 56 to 10 is the gift taxation. All this you will see later. Only the 10 part, 56 to 10. This is the gift taxation. So first one is what? Any sum that is of money aggregate of 50,000 rupees. That's fine. Then immovable property is there. Then movable property. That's what we need to do. Now, if I take an example, right? What? I receive, so anything which is how much, guys? More than 50,000, right? Even immovable property, movable property, all those things. Even movable property also more than 50,000 is the thing. Now, I receive, let's say, shares of 40,000 from one person, cash of 40,000 from one more person. Total cost is 80,000. Is gift taxation applicable or not? money should be more than 50. I just told I received 40. Movable property shares also more than 50 for without consideration. Let's say I received 40. Total is 80. Should I pay tax? Or each one is separate? Money more than 50 and movable property more than 50. Is it like that? Or all put together more than 50? All put together more than 50 or individual? All put together. So you see guys, the best part of the story is, you check here, one small thing will give you the answer here. There you go. You see, there is something called semicolon. See, one more semicolon. Here also semicolon. Everywhere there is a semicolon. Here you see semicolon, semicolon, semicolon. What does a semicolon do? See, any sum of money without consideration, semicolon. Then immovable property, semicolon. Then movable property, semicolon. What does a semicolon do? Semicolon is nothing but full stop and a comma. Means what? This particular thing is separated from the next point. However, all the three should be read under the same subsection. Semicolon is there in every act, every section. You'll be shocked to know. See, one. Anything you open, guys, you see here 1, 2, 3, 4, 5. Which means all this is part of the same subsection, I agree, but each line is separate. Should not be read combined. Which means 56 to 10, A, B, C is separated by a semicolon. Similarly, 56 to 10 in this also, it has again A. In B also it is BA, BB. All this is separated by a semicolon, which means what? That it should be read separately. But still it should be read continuously with each other, but each one is separate. So is it 50,000 per, what do you say, all put together, or 50,000 different things? Immovable property 50,000, movable property 50,000 and cash 50,000. That's how you should read. Got it? So cash 50,000, immovable property 50,000 and then movable property 50,000. It should not be read in a combined way because of this semicolon. Do you understand? So semicolon separates point number A from point number B. Correct? This is exactly like a CA student. Semicolon. If you see semicolon. I want to stop and run away from CA. I'm dying, but still I have to continue. No choice until I finish. So semicolon is representation of a CA student, no doubt about it. So if you see here, yeah. So first example, guys, you see Mr. A is receiving gift of shares 45,000 and gift of cash from Mrs. A 40,000. Totally how much is it? 85,000. So gift of 85,000. Is 56 to 10 applicable or not applicable? Not applicable. Why? Because you have to read it separately. 56 210A is separate from 210B. It should be each one separate. It's not all put together. Got it? Copy, guys. Example number 1. Ultimately what? Per, like, the gift of more than 50,000 and, it cannot be added and made more than 50,000. Each item is 50,000. Then I asked you one doubt. If from 60 people, I receive 100 rupees each. From 600 people, sorry, I received 100 rupees each. Is it taxable? Because it crosses more than 50,000. Or should it be per person? Like I receive from each person more than 50,000. Or is it all persons put together more than 50,000? So for that again you see the bare act here. A sum of money I have received exceeding 50,000. Okay, but see this dialogue. Aggregate value. Aggregate value means what? All put together. Correct? So even if you give me 10 rupees, somebody else gives me 100 rupees, somebody else gives me 1000 rupees. I add everything during the year. If it crosses 50,000, fully taxable. It's not like basic exemption limit. I receive 60,000. Is only 10,000 taxable? No. Full 60,000 will be taxable. Right? So That also you can write down, guys. You can write down somewhere. Let me see if it's there. No, you can write that down. It is second point you can write down. It is money should be received in the aggregate more than 50,000, not from an individual person. Money, if received in the aggregate, money, if received in the aggregate, money, if received in the aggregate, more than 50,000, then it is taxable. Right. So this one example is there in the material only. You check. Please read 9.3. 9.3. Read this example sum of money. 9.3. You open that and read, you'll understand. Only this part. Sum of money. Thank you. Understood, guys? Next. What if I receive 48,000 rupees worth shares from one person, 30,000 rupees gold from one more person, both immovable property, both crossing 50,000, not individually but aggregate. Then from one person 40,000 gold, one more person shares 45,000. So I need to see again whether aggregate word is there or not. See, movable property, no, here. C, other than immovable property without consideration aggregate fair market value. Correct? Means what? Should I see each person or all put together? All put together. So second example is this. Mr. Praveen got 48,000 gift of shares from Mr. Muruku, Miss Muruku, sorry, and 30,000 gold from Miss Kadalai. Totally how much? 78,000. Will it come 56 to 10? Yes. Why? What have they used the word? Aggregate. They've used the word aggregate. That's why. Come on, guys. Copy. Copy it down. Aggregate. So definitely 56 to 10 will come. Subsection number and all really not important. 56 to 10 is more than enough. So that's the second example. Yes. Now, see, if you see here, there are two things. No, one is without consideration, one is inadequate consideration. I'm talking about movable property. See here, without consideration, how much is it? 50,000 rupees. With consideration, the aggregate value of the property by an amount exceeding 50,000 and the aggregate fair market value exceeds such consideration. Means what? So if I receive the difference between what I paid and what I received should be more than 50,000, which means if I received gold worth 5 lakhs, but I paid only 1 lakh for it, what's the difference? 5 lakh minus 1 lakh, 4 lakh. Is it more than 50,000? Yes. So is there gift taxation? Yes. Gift taxation is on entire 5 lakh or the difference? Always the difference, because 1 lakh I've already paid from my pocket. It is on 4 lakh. That's okay. So the difference must be more than 50,000 if it is inadequate consideration. If there is no consideration only, then the entire amount must be more than 50,000 rupees. We have seen this. My question to you is, now, both should be 50,000 put together, right? In the sense, I mean, basically, they have used the word aggregate. Aggregate means what? I should add everything. You just saw this example. Third example, guys. Third example. You see. Mr. Praveen received 48,000 shares from Miss Murukku. Is it without consideration? Yes. Second example, Miss Kadlai sold gold to Mr. Praveen, selling price 1.1 lakh, FMB 1.5 lakh. Selling price how much? 1.1 lakh, FMB is 1.5 lakh. What's the difference between the two? 40,000. So what is the benefit for Mr. Praveen here? 40,000. What is the benefit from Mr. Praveen here? 48,000. What is the adequate full benefit? 88,000. Is gift taxation applicable or not? Answer. Did you understand the question? Ideally, what did I say? If it is without consideration, entire amount must be more than 50,000. If it is inadequate consideration, difference must be more than 50,000. Correct. Here is the difference more than 50,000? No. Is the, what do you say, FMB more than 50,000? No. But should I aggregate it and tell it? Should I aggregate without consideration and inadequate consideration? And then say it is more than 50,000, or that also should be seen separately? Are you understanding the question, guys, everyone? That also should be seen separately, or should I aggregate both? What did I tell you? When is there tax? When the no consideration is more than 50K. And when there is tax, when the difference between selling price and FMB is more than 50K. In this example, selling price minus SFMB difference is less than 50K. No consideration wala is also less than 50K. But if I add everything in the aggregate, movable property, I add everything. Movable property benefit 1, 48,000. Movable property benefit 2, 40,000. Aggregate 88,000. Is it taxable or no tax? Should I see? I already told you I should see cash separately, movable separately, immovable separately. But in movable, should I see with consideration, without consideration separately? Or that also I can mix. Are you understanding, guys? Different combinations I'm giving. What do you think? Separately or not? Simple answer. Sir, if there is semicolon in between the two, separately. There is no semicolon, together. See, this entire interpretation is based on semicolon. Let's see the Buyback. Other than immovable property means what? Movable property without consideration, semicolon. For consideration, it is separated by a semicolon. So what should I take? Separate. So will there be gift taxation for this? No. Got it, guys? Everyone understood? Yes. Copy. Yes. Huh. Yes. Yes. Difference. Difference. Only on the difference. Tax should be paid only on the difference, guys. Because I've already paid 50,000 from my pocket. 1.5 lakh minus 50,000 is 1 lakh. Is 1 lakh more than 50,000? Yes. So I should pay only on 1 lakh. Difference always. Copy this. I hope you understand. So is it what? Yes. It's always the difference which is taxable. Right? Difference only is taxable. So in this case, this also you should see separately. So what did I tell you? Cash should be seen separately, immovable separately, movable separately. But in movable, without consideration, inadequate consideration also should be seen separately. Only because of semicolon. I mean, believe it or not, imagine, because of semicolon. No one explains the logic, they'll just make you mug up, which is horrible. You should tell why it is. Because once you become a CA, people will ask you why. No, my teacher told me that's why. Textbook has it, that's why. No, you should learn to interpret the Bare Act. Right? So because there is a semicolon. Semicolon changes everything. Now, same logic I will use, let's say, immovable property. One person gives me immovable property worth 48,000. One more person also gives me immovable property worth 40,000. I'm not talking about with consideration, without consideration. I'm talking about without consideration. So, like this example, here I received shares also, gold also, movable, all put together more than 50k. Similarly, I'm talking about immovable property. So, one person gives me one small area, Panbida shop, 40,000 rupees. Immovable property, how will you get so much? One more person also will give me one more gift of some in the some village deep down. He will give me one plot of land for 10,000 rupees. Sorry, for 40,000 rupees. So 48,000, 40,000, 88,000 rupees. I have got a gift from some random person, plot of land. Somewhere in the village, it's or in a rural, not village, because that will become rural agricultural land. In some urban area only, but one very small plot of land, very one small part. I got for the worth of how much now? 88,000 rupees. Taxable or not? Taxable or not? Understood? Immovable property. From one person gave me how much? 40. One more person gave me how much? 45. Total 85. Taxable or not? Taxable. See, immovable property I'll show you now. Any immovable property, correct? Without, I'm talking about without consideration or with consideration? Without consideration. Stamp duty value of which exceeds 50,000 rupees. Stamp duty value of such property. Is there the word aggregate here? Are you seeing the word aggregate? No. So immovable property you should see per property or all put together? Per property. Deadly. See, movable you see, guys. Movable you see. Movable you see. I'll show you. Crazy it is. Move other than immovable property means which what? Movable property. See the word aggregate. Yes or no? Aggregate. I asked you about cash. Any sum of money without consideration. Cash. Aggregate. 600 people, 100 rupees each. 60 people, 100 rupees each. What is the word? Aggregate. Immovable property, aggregate word is not there. Deadly. So is it per property or aggregate? Per property. Right? So next example. Mr. Praveen is receiving from Mrs. Sheila 48,000 immovable property. From Mrs. Mala 45,000 immovable property. Both put together is how much? More than 50,000. But will 56 to 10 come? No. Why? The word aggregate is missing. Immovable property I should see per property. Understood, guys, all of you? Copy. Done, guys. So aggregate word is missing. So guys, see here, gift, employer-employee relationship, if it is money, fully taxable. I'm talking about gift of money. Gift of money. So if I receive, or money or anything for that matter, if I receive as an employer-employee, if I receive money, fully taxable. If the employer gives any money to employee as a gift, fully taxable. If I gift a money in kind, not money, but anything in kind, like some, what do you say, lunch box, or if they give some water bottle, that and all will not be taxable because the amount will be less than 5,000. But if he gets, let's say, a camera or anything with laptop where the amount is more than 5,000 rupees, then it is fully taxable for the employee, which we'll see in salary anyway. Business and profession. You are a chartered accountant, is very happy with your services. He'll give you a Rado watch worth 1.5 lakh rupees. Is it taxable? Yes. We saw it in PGBP. Nexus will be there. Nexus means connection. Other gift. Other gift. You remove all this. Other gift, guys, 100% now it is taxable under which one? Income from other sources. Because we are not talking about employer-employee. We are not talking about business profession. We are talking about other gifts. Gift received, money received by you from your friends, money received, immovable property received from a servant. All these are other gifts. Is it business profession? No. Is it employer-employee? No. So all this no need. Till 2017 only individual were covered. Now anyway, now it's very simple. Gift received by any person is taxable under 56(2)(10). So it is always taxed in whose hands? Recipient hands or the donee's hands. Recipient or the donee's hands. Correct? So this you need not write down. Earlier it was only individual. From now, from basically from 2017 onwards only, it is all are covered, not just individuals. Company receives a gift from some random person. Is it taxable in the hands of the company? Yes. Partnership firm receives? Yes. Hindu undivided family receives? Yes. It is taxable in all the hands. Got it? Yes or no, guys? Easy, no? Yeah. Copy. There is the normal gift. Other gift, you see, guys, you just discussed now. Other gift, right? You see, other gifts, money, immovable. I'll explain first, then you can copy everything. I'll give you time. Money. Money is what? If aggregate money received is more than 50,000 per annum, then fully taxable. Aggregate word is used. I told you 600 people giving 100 rupees each, fully taxable. Next, movable, we'll come to movable property. Movable property means what, guys? Shares, security, jewelry, drawing, archaeological collection, painting, sculpture, work of art, bullion, VDA. VDA means virtual digital asset. Guys, this is defined. Property is defined in 56(2)(10). Car is not covered, believe it or not. So today, if I gift you a car, is it taxable in your hands? No. Why? It's not covered. Why is it not covered? Guys, if I buy a BMW car today worth 80 lakhs, in 5 days I want to sell, will I get more than 80 lakh or less than 80 lakh? Less than 80 lakh. It always depreciates. So gift taxation was always, gift was always given to hide the asset and increase the value, and I didn't have to pay tax. When car, if I gift you, it is of no use. Value will decrease only. So if I gift it to you, tomorrow you can't sell it at a higher value at all. It will be lesser value only. So car is not covered. You would have seen Anirudh Ravichandar got car from this Vikram movie director. No, Kamal Hassan. Kamal Hassan only gifted a car to Anirudh. Now, is it taxable for him? Yes, because it is nexus business. Business or profession? No. Is it other sources? No. Why did is Kamal Hassan a fool just to gift car like that? No, he was very happy with the music of Vikram movie. That's why he gifted. Is it related to business? Yes, 100% taxable. Right? So you should see each and every case and then decide, because there any gift is covered under PGBP. So car worth 60 lakhs was gifted to whom? By Kamal Hassan to Vikram. So if you see, there are pictures and all. No? And also he gave it to this guy also. No, what's his name? Kamal Hassan gifts car to Lokesh. Lokesh Kanakraj, right? So if you see, yeah, you see. Tell me now, he's gifting here. Kamal Hassan has gifted here some car, Lexus. See, taxable or not? Yes. Why? Like business. That's it. But if you receive some gift, random gift from your friend, car, taxable or not, guys? Not taxable. Why? Because tomorrow you cannot sell it for a higher rate at all. If Virat Kohli is gifted a car and he sells it, then the value may increase. That's a different thing. So man of the match, man of the series awards and all they receive, is it taxable or not? 100% yes. Why? He is receiving in the nature of business or profession, not in anything else. Understood? So you should see the facts of the case. But I am only talking about other gifts. Other gifts means what? Is it related to business or profession? No. Is it related to employer-employee? No. I gift you one car because you scored well in, let's say you scored 100 on 100 on in DT and IDT. No, it's impossible. Assume. No one till today in the history has received 100 on 100 for DT, IDT. It's not possible. It's not possible. In costing, they have got. I don't know how, but they have got. In AFM, in CA final, they have got. DT, IDT, impossible. But let us say you have done. I am gifting you a BMW car. The toy. Not the car. Toy. Like this, if you put it, will go, no? That toy. Anyway, let's assume I gifted you one BMW car. Correct? Let's say 80 lakh rupees worth. Is it taxable in your hands? No, because it's not covered only. Is it in the employer-employee relationship? No. Is it business or profession? No. So taxable or not? Not taxable. That's the best part. So shares, securities, jewelry, drawings, archaeological, all that is covered. But what is not covered? Car is not covered. Doubt? Everything, car, bike. Motor vehicles are not covered. Right? Motor vehicles are not covered. That Chapadasi, Pakistan Premier League. Those man of the series award is bike. Beggars. Correct? They are giving, what do you say, to one player because he scored 5 sixes, they gave him a hair dryer. That poor guy at least had hair. Even imagine if he was bald. Correct? Yeah. That Chapadasi country, they are giving in PSL, Pakistan Premier League or whatever is there, no? They're giving him bike. Bike is the man of the match award, guys. Imagine. In India, we used to give that 20 years ago. Bike for players. Dhoni and all got in 2007. 2005 and all, he got that bike. That time now PSL, hair dryer. Correct? I'm not even joking. Yes. So if you see, all those gifts they'll give. So shares, securities, jewelry, drawings. Yes. So if you see, car is not, any motor vehicle is not covered, basically. You see, without consideration, how much, guys? If aggregate FMV is more than 50,000, fully taxable. So if I get shares, art, jewelry, 80,000, aggregate fully taxable. On the other hand, if inadequate consideration, if aggregate FMV minus consideration is more than 50,000, then difference is taxable. Whose doubt? Your doubt. Difference is taxable. So shares FMV 1 lakh, selling price 30,000. What's the difference? 1 lakh minus 30,000, 70. 70 more than 50? Yes. How much is taxable? 70. Difference is taxable. Difference is taxable. I'll give you time to copy, don't worry. This is regarding movable property. First one was regarding money. Now immovable property. Immovable property also they have defined. Land, building, both. That's all. Land, building, both. Without consideration, if per property STV is more than 50,000. without consideration if per property SDV is more than 50,000, then fully taxable. Per property. Inadequate consideration per property again. Inadequate consideration per property. If two things are there here, again with consideration, without consideration. That without consideration already discussed. If per property, not aggregate, per property more than 50k. Inadequate consideration again per property. I told you SDV minus consideration more than 50,000, that is one condition. Second condition also, this you will know from capital gain. SDV must be more than 110% of consideration, that you know. If it is less than 110, within the threshold anyway. So two conditions must be satisfied, guys. SDV must be greater than 110% of consideration, and SDV minus consideration must be more than 50,000. If both the conditions are satisfied, then difference will be taxable. Difference will be taxable. Example, selling price 10 lakh, SDV 10 lakh 60,000. What's the difference? Is it more than 50,000? Yes. But is SDV more than 110% of selling price? No. What is 110% of selling price? 11 lakh. Is 10 lakh 60 more than 11 lakh? No. So will gift taxation come? No. Understood, guys? Two conditions must be satisfied. What? SDV must be greater than 110% of consideration, and SDV minus consideration must be how much? More than 50,000. So what you need to do now is copy this, and importantly, after you copy, I'll give you time, don't worry. After you copy, you can go to this 9.3 and see that full example. You'll fully understand. Full example you can read. Okay, first copy. I'll give you time. 1 second. Did you understand, guys? All of you, yes or no? Very easy, guys. Gift taxation, very easy. So, right. I'll just show you this. What? One by one you write down actually. So the entire structure is like this, guys. For your knowledge, the entire structure goes like this. You can just leave the page accordingly. It will be like this, or you can write it chart wise, or you can write whatever it is. But I will just zoom in and then you can copy. Are we done? Wrote examples all clear? Yes. So now write down, guys, before we'll take a break in a while, 5-10 minutes. Write down exceptions. These exceptions means what? Not taxable. Exceptions not taxable. Exceptions means what? It is not taxable. So write down exceptions. No 56 to 10 in the following cases. No 56 to 10 in the following cases. First one, on the occasion of marriage. First one, on the occasion of marriage. So guys, any gift received in marriage, tax free. Anything, house, money. That's why during marriage people give lot of gifts, because it is tax free for the giver also, receiver also. Sir, from my friends also I have received, doesn't matter. Marriage is exempt. Any amount that you receive, any gift that you receive is exempt. Sir, my friend's marriage or my marriage? Your marriage. Correct, not your friend's marriage. Sir, what about my parents' anniversary? No. What about my wedding anniversary? No. It is what? Your marriage. So on the occasion of marriage. Second one, from a relative. So guys, on marriage, anything you receive is tax free. Second one, from a relative. Don't read both and tell on the occasion of marriage from a relative. No. From a relative you can receive any time. Right? So when your grandparents give you something, tax free. When your dad gives you something, tax free. So on the occasion of marriage, from anybody, tax free. And from your relative, any time, tax free. Who is the relative, guys? Definition I've given in 9.4. Just quickly go through. No need to mug up, but it's very simple. For individual and the spouse spouse is there, and your brother, sister, spouse's brother, sister, and their spouses. Basically, guys, very simple. You and your spouse, all the interconnections means her brother, her sister, your brother-in-law, their brother-in-law, everything. Plus lineal ascendant and lineal descendant means what? Go any generation up, any generation down. Everybody is your relative. What about my uncle, auntie? Means my mom's and dad's brother and sister. Is that covered? Yes. See, parents, brother and sister is also covered. What about my auntie, uncle? My dad's brother's wife, covered. So that's the best part. Everybody is covered. Spouse, brother or sister of individual, brother or sister of the spouse, brother or sister of either of the parents, lineal ascendant, lineal descendant, everyone. Spouse of the relatives also, everyone is covered, guys. So it is you and your spouse together and their what? Lineal ascendants, lineal descendants. Your father-in-law, mother-in-law, yes. Your father-in-law's brother, yes. Everyone. Right? So basically, everybody is covered. See, spouses, brother and sister, lineal ascendant and descendant, and their spouses. Sorry, what about your spouse, your father-in-law's brother covered or not? Read this chart. I just asked you that question and I told an answer. I'm again reconfirming the answer. Tell me, your father-in-law's brother. Read. See this. Your father-in-law's brother covered or not? You are an individual. Your spouse's parents are covered. And their spouses are covered. Means your father-in-law, mother-in-law are covered. And lineal ascendant or descendant. Means your father-in-law's father, your father-in-law's other children, all of them are covered. But their brother and sister, not covered. Spouse's brother and sister covered. And your parents' brother and sister is covered. Father-in-law's brother not covered. Just for your knowledge. Everything they have not covered it. Your father-in-law and mother-in-law's brothers and sisters are not covered. Because it's only lineal ascendant and descendant. And your brothers and sisters. Anyway, none of this they'll ask in the exam. Don't worry. You should just know, they'll just directly give you relative. They'll not ask you any relationship. Don't worry. I'm just telling you. Right? In Companies Act, what is relative definition? It is just one generation up, one generation down, brother and sister. That's it. But in Income Tax Act, all generations up, all generations down. Plus, there only spouse is covered. Here, spouses all generation up, all generation down covered. That's the beauty. Cousin, brother, sister, is it covered? Is it there anywhere? No. It just says the lineal ascendant, descendant and their spouses. It doesn't talk about their children. So, cousin, brother and all not covered. Uncle, auntie covered. Right? Cousin, brother and all not covered. That's about. Second one is relative. Third one. For a HUF, Hindu undivided family. For a HUF, any member of the HUF will be a relative. For a Hindu undivided family, HUF, any member of the HUF will be a relative. Any member of the HUF will be a relative. But if HUF gifts immovable property, if HUF gifts immovable property to a member of HUF, guys, taxable or not? Guys, here who should be the recipient? HUF. For HUF, who's a relative? Member. Gift from a relative is not taxable. So member of HF gifting to HF, taxable or not? No. This is ulta example I am giving. HF is gifting to member of HF, taxable or not? Yes. Taxable, assuming there is no partition. If you remember in capital gain, we saw partition of HF is not a transfer. So if partition has happened, no tax. But if there's no partition, but HF is gifting a property to whom? Member of HF, taxable or not? Yes. So what is exempt, guys? Member of HF gifting immovable property to HF is exempt. Mind you, gift taxation recipient must be HUF. If a member of HF is giving it to HF, is it taxable for HF? No. Ulta case. HF is giving to member, taxable. Understanding? Yes. Got it? So next, guys, other points quickly write down. On the occasion of marriage and all we have seen. Next, will or inheritance. Will or inheritance. Next point, will or inheritance. What is this, guys? My grandfather, when he is dying, he gives me his 100 crore property. Is it taxable for me? No. Inheritance is that. Will means what? Will anybody can get. Ratan Tata had no relationship with Shantanu Naidu. No relationship, but their relationship was professional. He was his secretary. He got a gift of some 5 crore. Not gift, in through will, he gave it to him. Is it taxable for Shantanu Naidu? No. Next one. In contemplation of death. In contemplation of death. In contemplation of death means what? Somebody is dying. Somebody is dying. And when he is dying, no, he will gift some property. That is, one is will, one is inheritance. This is not that. When he is dying, you look after me really well. I am dying, so I will tell, okay, though will has something other, no problem. Since you looked after me really well, after my death, you will get this property. This is not a will, this is not inheritance. This is in contemplation of death. If you decide something, that will override the will also. Contemplation means waiting for death. If I don't die, you will not get. Correct? One of my uncles was had an accident and about to die. True story. Distant uncle. His brother had never spoken to him for 20 years. Suddenly, when he was about to die, he came off. He looked after him really well. All fake. Why? Because this fellow is almost 200 crore worth. So I was also seeing, bro, what acting, Oscar winning performance. Best part is my uncle survived. Right? Nothing he gave. Nothing he got also, nothing he gave. True story, actually. So I'm seeing, sir, 20 years no contact. Suddenly, hospital he comes, crying. Oh, sorry. Then full looking after 10, 10, 15 days. I was like, nice. What a performance. Pure cinema. Right? Yes, that is what I was thinking. He was waiting for him to die. This fellow didn't die only. Right? Good. So didn't get, now and again they are broken up, not talking. That was only that momentary thing. Property, no, brothers, sisters, everything will go. All relationship will go when money comes. You also know, 95% of property disputes is between family only. I should get this property, you should get that property. Yes. Other things you can just go through, nothing great here. Guys, amalgamation, demerger, holding giving to subsidiary, subsidiary giving to holding, these are all not gift. It's same, all these points you saw same in capital gain. We saw no holding company transferring to wholly owned Indian subsidiary. Indian subsidiary giving to wholly owned holding company, Indian company, all same, no change. What about charitable funds? you give anything to Bangalore University as a scholarship, where you will tell my grandmother died. In my grandmother's name, I want to institute a scholarship to the best student who scores very well in accounts. You donate to university, taxable or not for the university? No. University gives you scholarship, taxable or not now. Some of you came to me and said, CA scholarship, give me my membership number. I told you I'll give, but that stupid fellows will not send me the email. Till today, one email also I have not got. I have not got in that thing also, it's not coming. So I told there's no point in me giving, it will not come to me only. Now, let's say CA Institute gives you scholarship of 50,000. Is it taxable in your hands? No. All these scholarships are not taxable. That is what these sections say. Okay. So after the break, is around leave, guys. Will never ask in the exam, but you just go through that. After the break, we will discuss a few sums and go on with it. How is it? Easy, difficult? Still, we have many things to do. All this we have not done. Still have to do. Don't worry. You still have to do all these things. You have to do. This is just gift taxation. We have to do deemed dividend. All those things are there, but it's very simple. Take a break. All right, guys. So we'll just take for 1.5 hours, and I have a meeting got confirmed. Then you can leave for the day. Like, yay, Sadhya, awesome, have fun. But yeah, it was not supposed to be my class today, honestly. Anyway, no problem. Next 2 days we will take till Wednesday. I have. After that, IDT will resume and be finished. DT also is almost over. All small topics pending. That's all after this. Then good. Place is over. Okay, guys. So moving on now. All these things we had seen. So you remember this concept capsule one notes I had given? Remember, all of you have it? Yeah, I'm not doing the actual sums, that we'll see later. Concept capsule open, guys. Concept capsule will come to that. Come from other sources. This concept capsule I had sent you a PDF, no? Everyone has it? Yeah. Just to test the concepts here and there. See, question number 1. Solve quickly. Here only we'll see. Mr. Sandeep received a sum of 20,000 each from Mr. Lalit and Mr. Santosh, and 10,000 from Mr. Koti, who are Koti, no, Koti. Yeah. Who are Koti in Kannada is monkey. Yeah. Who are non-relatives on the occasion of Christmas. What do you think? Christmas and all not covered, guys. More than 50,000 taxable. How much is it exactly? 30. 50, guys. 20,000 each from Lalit and Santosh. 20 plus 20, 40 plus 10, 50. Is it more than 50? No, exactly 50. Taxable or not? Not taxable. Same, right? Mr. Ashok, and even the difference, if it is not more than 50,000, not taxable. Mr. Ashok received a sum of 5,10,000 as gift, details of which are as follows. From relatives on occasion of birthday. Birthday covered or not? No. But relatives covered or not? Yes. So 1 lakh full is not taxable. You can receive any time from relative, no problem. So it should not be considered only, guys. This is not taxable. Unregistered charitable institution compensation for flood. So guys, if you receive any money from unregistered institutions more than 50,000, obviously taxable. Registered, no problem. I told you, charitable, university, registered, no problem. Non-registered, problem. 1,50,000 received from friends on occasion of birthday. Friends also not covered, birthday also not covered. Answer, taxable. How much is taxable? 1,50,000 minus 50 or full 1,50,000? Full 1,50,000. 2 lakh received from a neighbor who is in deathbed. This is contemplation of death. Right? So, what do you think? Exempt. If he dies. If he doesn't die, then you have to return back the money. So, in contemplation of death, he knows he is dying, so he is giving you. So, this is like, this will override the will or inheritance actually. That's why during the deathbed, people suddenly will become nice. even the other people, because they want money. So this will override the will. In will, he would have written something. But when he's dying, he'll give that to somebody else. What will override what? The latest one will override the old one. That's why when persons are dying, family members become very nice, very sweet. Not because of, oh, that fellow is dying, not because of that, because of money. Guys, property is about everything. 20 crore, 30 crore, 40 crore property you have. Your life is settled once you get that property, right? So there is nothing. All the fights happen because of property only. I've seen so many fights. Mr. Here. Arun receives a motor car as gift from Mr. on the occasion of birthday. The fair market value of motor car 25 lakh. No tension, right? Why? Car. No problem. Raman received 5 lakh from his relatives and the parents of his wife, that is parents-in-law, definitely their relatives, on occasion of their marriage. First of all, marriage they received. So, no problem. But otherwise also, if they have received any of these things also, no tension. Why? Anything received from relatives, not a problem. He also received a car, no problem. Jewelry, no problem. Fair market value, no problem, because everything was received on the marriage. Any money received from marriage from anybody, tax free. That's why people do lot of these things during marriage. You can't give 1 year after marriage and all that. Should be in and around the marriage dates. And you should say on the occasion of marriage you've got. We South Indians, no tension. We are Chapadasi fellows, will not get anything. 101 will get. 501. Correct? Yes. We give also like that only. 501. Correct? 101. So here for us what? If you count also, Nirmala madam will say, okay, you only keep. He'll tell and we'll go. But it's no problem. North India, technically, lot of money. Correct? Crazy money they spend on marriages. Some birthday party only for a kid they spent 10 lakhs. In South India, my entire life was built on 10 lakhs. From childhood till I graduated CA. Correct? That's what it is. So if that's how it is. That's the difference between the North India and South India in terms of money for sure. Correct? Especially in Karnataka and all that, that's all. 101. Right? 500 and you all know. 501. That's it. Not more than that. So even if you count also, nothing will happen. So Mr. Ketan acquired a land from at Mumbai from Agarwal for a purchase consideration of 1 crore on 1124. Assessable value of the property for stamp duty purposes 1.3 cr. Tell me now 1.3 cr minus 1 crore 30 lakhs. Is it more than 50,000? Yes. And is it 100 more than 110% of consideration? Yes, because consideration is 1 crore. 110% is 1.1 crore. Is 1.3 crore more than 1.1 crore? Yes. Subsequently, in a different transaction, he was gifted with a land near Indore by his friend. So, acquired a land for a purchase. This difference is taxable. Yes or no? 1.3 minus 1, 30 lakhs is taxable. And mind you, for removable property, it is per property. So, you are acquiring a land at less than consideration. Both the conditions are satisfied. SDV is more than 110% of consideration. Point number one. Second one, difference is more than 50,000. In a different transaction, he was gifted with land near Indore. The assessable value stamp duty purposes 49,000. What do you think? Less than 50. So no problem. It is per property. Will you add both? No. Members of HF, like that, guys. Simple. That is what they say. Moving on. See, question number 5 we'll see. Check. Question number 5. A acquires an immovable property from B during August 2023. Relevant data is given below. STV on the date of agreement, SDV on the date of registration, consideration for acquiring property from B is the consideration. Whether advance is paid by account pay check, DD or ECS. Guys, we have seen SDV on the date of agreement should be taken if you have paid some advance through account pay check or bank transfer. Otherwise, it will be on the date of registration. So whether I should take this amount or this amount, totally depends on how I have paid. Is it advance paid by account pay check? Yes. Yes. Only two. So for these two things, I can take 4 lakh, 4 lakh and 4 lakh 50. Other cases, I have to take, yes, as simple as that. So SDB, I should do this or this, and then consideration they have paid. So what I should do? Condition number 1 is SDV. First of all, I do 110% of consideration. Second is SDV more than 110% of consideration. And third one, SDV minus consideration, is it more than 50k? And if condition 2, condition 3, both it is a yes, then SDV minus consideration will be IFOS. Yes or no? SDV minus consideration will be IFOS. Right? So the entire structure should be solved in such a way. I'll give you the structure. You only have to solve. Then we will compare the answers. So the structure should be like this. Case 1, case 2, case 3, all that. SDV agreement, SDV registration, advance paid as per prescribed mode, SDV considered. What is the SDV considered? You should write a note. Then consideration, 110% of step number 5. Is SDV greater than 110% of step number 5? And FVOC. If step number 7 is equal to no, then FVOC is equal to step number 5. Step number 7 is equal to yes, then FVOC is equal to step number 4. Basically, I should do this. Is 4 greater than 6? Is SDV greater than 110% of consideration? Then I will get the, then I should see in the hands of the seller I should do first. Guys, both I should do in the hands of the seller, in hands of the buyer. Hands of the seller, what will be the SDV? If SDV is greater than 110% of consideration, then FVOC will be SDV. Yes or no? We have seen that already. On the other hand, in the hands of the buyer, this one, SDV minus consideration and SDV is greater than 110% of selling price. If both 1 and 2 is yes, then IFOS will be taxable. Correct? So will you try solving? I'll give you the structure. Please write down the structure. First one, in the hands of the seller. In the hands of the seller. Particulars, 8 items will come. Particulars, 8 items will come. In the hands of the seller first, 8 items. First one, STV agreement. Try it out. I'll give you the answer here, but please try it out. Don't see the answer now. Write down the structure on the left. Solve it on your own, guys. Most important. After hands of seller, guys, in the hands of buyer. Only the left hand column you copy, everything else you solve, guys. Very easy it is. Once you solve, full confidence you'll get. It's a combination of capital gain and IFOS. In capital gain, what should I see? Same dialogue. SDV more than 110% of consideration, then FVOC is different. Then in hands of the buyer, what happens? 56 to 10 will come. So solve it. Please solve. Did you get it, guys? Got the answer? So this is the answer here. So this is a difference between capital gain and, I mean, it's a continuation, no difference, continuation. For seller it is different, buyer it is different. Seller, what is the answer? Is SDV greater than 110% of consideration? If it is greater, then SDV only will become the FAOC. Otherwise, normal consideration will be the FAOC. And here it is two conditions. SDV minus consideration should be more than 50K. Second condition, SDV should be more than 110% of what? Selling price. So if both 1 and 2 is a yes, then amount, cost of acquisition 49.4. So what is the cost of acquisition is the question now, guys. Very simple. Amount SDV minus consideration, this I'll pay. Correct? Now, so the beauty here is, guys, you see, for me, how much did I pay? I'll tell you that. For that, I'll show you this. You'll understand. See this. Come to page 9.7. Very interesting example, I'll tell you. 9.7. See, got it? Miss Sita sells her house on 14/11/2021. When did she buy? 2001, 2002. What is the cost of acquisition? 4 lakh to Mr. Kunal. Selling price 40 lakh. STV 45 lakh. Mr. Kunal sells it to Mr. Adi. Selling price 84 lakh. When does he sell? 12th March 2022. Now, difference between the, first of all, capital gain for Miss Sita will be how much, guys? Selling price is 40, STV is 45. First question, what is 110% of STV? 44 lakh. Sorry, what is 110% of selling price? 44 lakh. Is SDV more than 110% of selling price? Yes. So what will be the FEOC? SDV. So for Sita, FEOC will be 45 lakh. Yes or no? Everyone agrees? Yes. Minus the cost of acquisition. That indexation you will do. That's okay. Indexation you have to do. No, Sita has bought it when? In 2000 and 2002 for 4 lakh. And by into 317 by 100 because in 2021-22 the this thing indexation was 317. Sita is over now. Now Kunal. Kunal. Difference between SDV and a selling price, is it more than 50,000? Difference between SDV and selling price, that is considered, is it more than 50,000? Yes. 45 lakh minus 40 lakh is 5 lakh. Is SDV more than 110% of consideration? Yes. So now Kunal also, should he pay tax? Yes. What tax? Gift taxation. How much? 45 minus 40, 5 lakh. Are you seeing double taxation here? Yes. This lady also, though she sold it for 40, she's paying tax on 45. Yes or no? This guy, though he bought it for 40, on extra 5 lakh, is paying tax. So he's paying tax on 5 lakh. Is it double taxation? Yes. Is gift taxation double taxation? Yes. Because it's a punishment. 50,000 threshold I'll give you. You play around in 50,000. That's all. You asked one doubt, no? Can you play around in 50,000? Yes. Beyond 50,000? No. So, Sita also has to pay. This fellow also has to pay. And SDV is greater than 110% that we have seen. Now, guys, that's fine, no? Because both the conditions are satisfied. SDV minus SP minus SDV more than 50,000. Difference is more than 50,000, and also the 110% rule also is sorted. Now the question is, this fellow Kunal will sell it to Mr. Adi someday. What is the FEOC? 84 lakh. My question to you is, what is the cost of acquisition for Mr. Kunal? Is it 40 lakh or 45 lakh? Why 45 lakh? Yes, guys, Kunal bought it for how much? 40. But he also paid tax on the extra 5. So Nirmala aunty will give you benefit. Since you have paid tax on 5, I will make your cost of acquisition how much? 45 lakh. This is the beauty. Did you understand? So under section 49(4), if you have paid gift taxation, your cost of acquisition will now be the SDV. If you have paid gift taxation, cost of acquisition will become the SDV. What is the cost of acquisition actually? 40 lakh. But what is the SDV? 45 lakh. So your cost of acquisition when you are selling it will be 40 or 45? 45, because you have paid tax on that extra 5 lakh. Did you understand? Now in this question that you have, tell me what will be the cost of acquisition in each of those cases. When this receiver, no, he sells it in the future, what will be the cost of acquisition? In the question that you are solving. First case it is normal, guys. First case 3,81,000, because that is the consideration I paid for. Basically I am saying, if it is not taxable, if IFOS is not taxable, whatever I have paid will be the cost of acquisition. But if IFOS is taxable, then the SDV will be the cost of acquisition. FEOC, basically, whatever FEOC you took, 4,70,000, and here it is 4,90,000. Why 4,70,000, 4,90,000? It actually was the SDV. Correct? If this is taxable, what is taxable? If IFOS is taxable, then the SDV will be the cost of acquisition. Did everyone understand this? Yes or no, guys? All of you? So, in that Kunal example, he paid 40 lakhs also, plus he paid 5 lakh also. In this example, receiver, she paid how much? She paid 4,19,100 also. Sorry, 3,81,000 also she paid, plus receiver also paid 89,000. Hence, when that person is selling, what will be the cost of acquisition? SDV, 4,70,000. Similarly, here also 4,90,000. Did you understand this? Yes? Awesome. Copy. See 9.8. So in this, Sita is not selling. Sita is gifting to Kunal. Is gift a transfer? No. So what is the capital gain for Sita? Nil. On the other hand, what would be the gift taxation for Kunal, assuming Kunal is not a relative? If Kunal is not a relative, will gift taxation come for Kunal? Yes. What will be the gift taxation? It is received for no consideration or inadequate consideration? No consideration. So obviously, is it more than 50,000? Yes. So full amount is taxable. What is the tax? So taxation for Kunal is 45 lakhs. Simple. Gift taxation in the hands of Mr. Kunal is 45 lakhs, fully taxable. Then you see gift taxation in the hands of Kunal, FVOC. That's done. So in which year? The year he receives it. No, gift 2021, 22. How much he has to pay? 45 lakhs. Now Kunal is selling to Adi. Now Kunal is selling to Adi. How much? Selling it for how much? 84 lakhs he is selling it for. How much will it be then? Now 84 he'll sell, no problem. What will be the cost of acquisition? 45. Why? Because he has paid gift taxation, boss. I've paid gift taxation 45 lakhs. So what should be my cost of acquisition? 45 lakhs. Very simple. In the previous case, it was 40 plus 5. In this case, full 45. Now a twist to the question. What if Sita and Kunal were relatives? For Sita, is there any taxation? No. For Kunal, is there gift taxation? No. Why? Sita is a relative. And tomorrow, when Kunal is selling to Mr. Adi, what will be the cost of acquisition? Cost to the previous owner. How much is it? 4 lakh. Did you understand? Cost to the previous owner? 4 lakh. Please read that example here. Given here only. Read. Check this. That's about it. Done. Next, guys. See. Guys, if you remember, there is this 50C, which we saw. What is the rule in 50C? SDV is greater than 110% of consideration. Where did we see this? Capital gain. That was for capital asset or stock in trade? Capital asset. My question is, what if I am a builder and I am selling it to you? For me, is it capital asset or stock in trade? Stock in trade. Should I also see SDV greater than 110% of consideration or not? So what was 50C? 50C said, if I sell it to you and if it is more than 110% of consideration, then as per that, FVOC is equal to SDV. All that we have seen in capital gain. My now question to you is, if I am a builder, stock in trade for me it will be. So for me, if I am selling at more than 110% of basically my selling price, my SDV is more than 110% of selling price, then what will happen? What should I do? Should I take that or no? Ideally, 50C is only for capital asset. I'm talking about stock in trade. So guys, the beauty is same section is also inserted in PGBP. And that section is called 43CA. You will ask, sir, why you didn't teach that time? That time, capital gain only you didn't know. Capital gain, if you know, then you can study PGBP. So, 50C, copy paste section, one more section, 43CA. 43CA and 50C, same. What does it say? Same. Whether you are a builder, whether you are a individual, for you. For a builder, what will apply? 43CA. For an individual, what will apply? 50C. Both same logic. So 43CA is equal to 50C. Now we'll do Jugalbandi to make it very interesting. Write down the example. So first you just write down 43CA is equal to 50C. 43CA is for stock in trade. 50C is for individual, capital asset. Okay, write down guys. Write down this example. Naresh. Now 4 combinations will do, but write down the full thing. Naresh 1/1/2019. Oh, you don't have this only. Oh, sorry. Is it coming or not? Just write down 2019. Naresh. Naresh 1/1/2019. Now it's getting switched on. Yeah. Naresh 1/1/2019. Cost of acquisition 10 lakhs. There, left hand side. Cost of acquisition 10 lakhs. Land and building. Land and building. Okay. There is an agreement to sell to Mr. Vishal. Agreement to sell to Mr. Vishal on 1/1/2020. 40 lakh is the selling price. 40 lakh is selling price. SDV is 58 lakh. SDV 58 lakh. Now advance. I pay advance guys through account pay check. advance I pay, account pay check, 5 lakh on 1/1/2020. What is the importance of this? Now the SDV I can take which day? 1/1/2020. Account pay check, advance I pay, 1/1/2020. 35 lakh I pay on 30/6/2020. 35 lakh I pay on 30/6/2020 and register it SDV 70 lakh. A registered value 70 lakh. Guys, on the date of registration, what is the SDV? 70 lakh. I should take 70 lakh or 58 lakh? 58. Why advance I have given? It is sold to Nehal on 31/12/2020 for 100 lakhs. Is the entire structure. Got it? So on 30/6/2020 registered how much, guys? 70 lakh. Now sold to Nehal on 31/12/2020 on 100 lakh. Now the question to you is, see, if Mr. Naresh is a individual, then 50C will apply. But what if Naresh is a builder? 43CA. So four combinations I can take. See, combination 1, 2, 3, 4. Naresh for him capital asset, Vishal also capital asset. Naresh stock in trade, Vishal also stock in trade. Naresh it is capital asset, Vishal is stock in trade. Naresh stock in trade, Vishal capital asset. Correct? For example, first one. Naresh is a normal individual. He is selling to one more individual. That is combination 1. Second one. Naresh is a builder. He is selling to one more builder. That happens if a builder cannot complete his property, he'll sell it out to one more builder. So one builder selling it to one more builder is second example. Third example. I am an individual. I don't want the property. I'm selling it off to some builder. Builder is going to make renovation and sell it to somebody. That is third combination. Fourth combination is what normally happens to everybody. I go to a builder, buy a house. Who is Naresh? Builder. Who am I? Normal person. Vishal is a normal person. So all four combinations will come. The first column speaks about 50C or 43CA. CA means capital asset. But the receiver, the gift taxation will come to the receiver. Receiver, should he receive it as capital asset or stock in trade? The receiver should receive. Always remember, gift taxation is on receiver or payer? Receiver, you know that. Receiver should receive 56/210. The entire thing hinges on receiver. So, receiver should receive it as a capital asset or stock in trade? Capital asset or stock in trade? So, if you see, guys, property definition. Property is received by the receiver. Property means the following: capital asset. Because of which, if I receive it as stock in trade, will 56/210 come? No, no gift taxation. Very, very important point. Write down here. 56/210 will come only when the receiver is receiving it as capital asset. When the receiver is receiving it as what? Capital asset. Because property is defined as what? Capital asset. For the first column, Naresh in this example, Naresh 43 CA may come, 50 C may come, no problem. 50 C will come when he is taking it as a capital asset. 43 CA will come when he is taking it as a builder. But for the receiver, Vishal, 56 to 10 will come only if he is receiving it as what? Capital asset. No need to pay this thing, gift taxation. We will do combination 1, combination 2, combination 3, combination 4, taxation now. Full will be cleared. Got it, guys? Now we have to do all 4 combo, correct? Like first combo, Naresh is selling it as capital asset, Vishal is buying it as capital asset. For Naresh, which section will come? 50C. For Vishal, which section will come? 56 to 10. Correct? You have to see that. Same, all details this only. 4 combinations we have done. So write down combination number 1. I'll explain. Combination number 1, Naresh it is what? Capital asset. Vishal also what? Capital asset. Naresh, first of all, Naresh. For Naresh, guys, SDV it should be greater than 110%. What is the selling price? 40 lakh. What is 110%? 44 lakh. What is SDV? They have given here. We have taken SDV 58 lakhs. I will not take 70 lakhs. I will take on the date of the agreement to sell 58 lakh. Tell me, is SDV greater than 110% of selling price? Yes. 58 lakh is more than 44 lakh. So what will be the FEOC? 58 lakh. So period of holding will be from 1/1/2019 to 29/6/2020. Guys, date of registration. SDV can be taken on 1/1/20 since part consideration is paid. But date of registration, period of holding will be till the date of registration only. What will not shift? Period of holding will not shift. What will change? Only SDV will change. SDV which date I should take? 58 lakh. Period of holding? Registration. Less cost of acquisition 10 lakh. So short term capital gain 48 lakh. Why? It's short term, 1 year, no? So 58 lakh minus 10 lakh, 48 lakh. This is for whom? Naresh. Why? What is the period of holding? 1/1/2019. This is Naresh is selling to whom, guys? Naresh is selling to Vishal. He took it in 1/1/2019, selling it on 1/1/2020. What is the cost of acquisition for him? 58 lakh. Cost of acquisition is how much? 50. Basically, for Naresh, what's the cost of acquisition? 10 lakh. What is the selling price? FEOC, what should he take? He should take on the date when it is agreement to sell has been entered into. How much is it? 58 lakh. So how much is would be 58 lakh? FEOC 58 lakh. 58 lakh minus 10 lakh, 48 lakh short term capital gain. Vishal, now tell me guys, Vishal is buying a property which is both are capital asset, capital asset. Vishal is buying a property worth how much? 58 lakh. But he is getting it at how much? 40 lakh. 58 lakh, getting it at how much? 40 lakh. So what is this thing for him? Gift taxation. 56 to 10. B. 18 lakh. When Vishal is selling to Nehal, he's selling it for 100 lakh. But what is the cost of acquisition for him? 58 lakh. Why? Because he has paid tax on the remaining 18 lakh. Everybody clear with this? Copy down. Case number 1. Name the Naresh part of it as A, Vishal part of it as B. Name the Naresh part of it as A, Vishal part of it as B. Case number 1 A, case number case number 1 Vishal is B. Case number 1 Naresh is A, Vishal is B. Done. Case 2, guys. Case 2, what will happen? Tell me. Case 2. For Naresh is a builder. Vishal, what? Vishal also is home. Builder. So very simple. For stock in trade capital, that's same. For Naresh, SDV greater than 110% of selling price, same thing. So for him, what will it be, guys? Is SDV greater than 110%? Yes, but it will be PGBP. So for PGBP, he should take 58 lakh or he will take 40 lakh. Guys, Naresh is a builder. He is selling the property to Vishal for 40 lakh. But what is the SDV? 58 lakh. Is SDV greater than 110% of consideration? Yes. Instead of 50C, what will come? 43CA will come. 43CA will come. Correct? Same. No, so my consideration will be 58 lakh or 40 lakh? 58 lakh. Is there any cost of acquisition and all here which should I take capital gain? No. Stock in trade means PGBP. So for Naresh, PGBP is how much? 58 lakh minus 10. So what is the actual PGBP? 48 lakh. And for Vishal, he is receiving it as what? Stock in trade. As per section 56, property means capital asset. For Vishal, deadly. Vishal, when he is selling to Nehal, he sells it for 100. What is the cost of acquisition? Need not take 48. He should take 40. For Vishal, IFOS will not come. Why? Vishal is taking it as stock in trade. Everybody with me on this? Yes. So this is for case number 2. Then obviously, my dear friends, for case number 3, A plus D will happen. And for case number 4, C plus B will happen, because you should mark this case number 2 as C, and for that is Naresh, and Vishal part you should name it as D. Here you see case 1, Naresh you named it as A, Vishal you named it as B. And case number 2, Naresh you are naming it as C. This is Naresh. Naresh you are naming it as C. Vishal you are naming it as D. Case number 3, case number 4 is a combination only, no? A plus D, C plus B. Everybody with me on this? Understood, all of you? Yes or no? Yes or no, guys? So coolly write down. Please write down. Read 2 times properly. That's it. Thank you. Yes, guys. Good morning. It's raining like crazy. Bangalore has become what? Swimming pool. Right. Yeah, sorry. So guys, yesterday we were discussing, let's just quickly revise. We had stopped at a place. Quickly revise the yesterday's discussion and then move on. So yeah, we started off with the gift taxation. We said income from other source means what? Basically, whenever other things are already done, It is charged already under various laws, various heads, sorry. If nothing can be charged under those various heads, it will come under IFOS, income from other source. So first we started off with gift taxation. Money more than 50,000, fully taxable. Immobile property without consideration, then inadequate consideration. Same with movable property. Movable property should be in aggregate, correct? Money also in aggregate. Immobile property is per property more than 50,000. But without consideration and inadequate consideration should be seen separately because it is divided by a what? Semicolon, right? Yeah. Then we saw all these examples and all we saw, that's okay. Then we saw employer-employee relationship, gift is money, fully taxable, kind, FMV more than 5,000, fully taxable. Business or profession, nexus, PGBP, any amount. Other things, gift received by any other person is subject to exceptions. Always taxation is in the hands of the donee, recipient. Other gifts we saw, money, the aggregate is more than 50k. Immobile property is what? Per property. How much is it per property? More than 50,000. And inadequate consideration for immobile property, again it is per property. Two conditions I have to see. One is from capital gain. STV is greater than 110% of consideration and SDV minus consideration must be more than 50k. Then the difference will be taxable. Next, movable property. You have security, shares, jewelry, archaeological collection, all those things. Without consideration, if aggregate FMV is more than how much? 50,000, fully taxable. Inadequate, same. Difference should be more than 50,000, then only it will be taxable. Is what we saw. Then we saw exceptions on the occasion of marriage from a relative. From a relative, always. Occasion of marriage from anybody you can receive. And for HUF, member of the HUF is a relative. So if a HUF is gifting immobile property to member of HUF, that is taxable because your recipient is not HUF. On the other hand, if member of HUF is giving to HUF, then only it is exempt. Recipient must be HUF, most important. Then we saw the other areas, your, what do you say? The other stuff that we saw is the charitable organizations, universities, all these things, if they either give scholarship or also take donations, there is no gift taxation. Then of course we had already seen in capital gain, holding company giving it to wholly owned subsidiary, then holding company which is an Indian company giving it to wholly owned subsidiary, sorry, a foreign company which is giving to wholly owned Indian subsidiary, an Indian holding company giving to wholly owned foreign subsidiary, all those things, or rather a wholly owned foreign subsidiary giving it to Indian holding company, all those things, just like capital gain, here also there is no gift taxation. Then we saw a concept called 50C, which you are already seen in capital gain, 50C. But that 50C for PGBP purposes, it is 43CA. So ultimately it's the same. So we saw one interesting point where all four scenarios we discussed. So Naresh, Vishal and Nehal, and I can sell it as capital asset. The other fellow can purchase it as capital asset. I can sell it as stock in trade, purchase stock in trade. But ultimately, finally, what happens is that, yeah, the case 4 happens in all the cases where people will buy it for whatever it is. So ultimately, I should see the FMV as on the date of giving the money. So this one, 40 lakhs, the SDV should be 58 lakhs on the date at which I give the basic money, and the selling price may be 40 lakh, but SDV I should take 58 lakhs. SDV I should not take off any other thing. SDV I should take as per that only. So for the other guy, it should be IFOS. Vishal has IFOS because the selling price is 40 lakh, but SDV is 58 lakh. Is it more than 110%? Yes. However, I should not take 70 lakh SDV and just 30 lakh as capital gain. 30 lakh is not capital gain. It is only 18 lakh. Done. Right? Then we saw some also, you had done all these things. Yes. So there was one amendment which is not relevant now. What is that? From 12/11/2020 to 36/2021, if any transfer happened during that time, then it is not considered as a transfer. During that time, if it happens, it is not considered as a transfer. Why? Because that was during COVID. So they said not considered as transfer means it is considered as transfer. But what I'm saying is the threshold limit they increased. Instead of 110%, they told 120%. What is that? SDV greater than 110% was there. No, they made it 120%. Why? Because that was immediately after COVID. During COVID, immediately after that, if you see, that is after the first wave, people did not know whether to buy homes, sell homes. The prices were varying like crazy. So government came up with an amendment only during that time, 6 months, 7 months. You can go up to 120% difference. Need not be 100%. That is completely irrelevant now. So there's no point writing it because 2021 is 5 years ago, guys. There's no point now studying it. They'll not give all those questions now. But you should understand that for 56 to 10, even when I'm buying the house, receiving the house at 120% difference also, it is there. It is only for this amendment which was there, 120%. 120% benefit was for only builder, mind you. Only for builders they have given the benefit. So if you are a builder, if your SDV is 1 crore, but you are selling it at 20%, consideration is 1 crore, but SDV happens to be 1.2 crore, that is still okay. It is only for the builders that given that benefit. It is not for individuals, other people. So 43CA benefit was given only to individuals. That is genuinely not needed now because it is not there. It's old. There's no point, sitting and studying old stuff, to be honest. Yeah. So that was regarding the, all this. So we saw all these areas. In contemplation of death also, yes. COVID amendment is no point now. You can just leave that. We should do something which they already asked, otherwise no. This valuation thing, same thing we have also discussed in capital gain. Like for example, my SDV actual consideration is 100, SDV is 90. Can I go to the valuation officer? Yes, I can go to the valuation officer. I can tell that I told you my auntie's example. Same, no change. 43C also I can go, 50C also I can go. There is no change only. That's normal stuff. So that's fine. Employee gift and all we have seen. And this also we saw what will happen otherwise. Right. So this I told you I've given that enhanced limit. You can just go through the example just for your knowledge. After 22, they have never asked any question. They'll not ask also because at 6 months period only it was. During the amendment time, they were asking. So you can go through these examples at your leisure, no problem. Write the heading, guys. New provision today, dividend. So there is something called taxation of dividend, and in this a different kind of dividend, deemed dividend. So write down heading, dividend. Dividend. Write down dividend. Right, dividend. Return on investment, 2 clause 35. Dividend, return on investment in income in Companies Act, guys, it is given in 2 clause 35. The definition of dividend in Companies Act, no, it's very weird. It says dividend includes interim dividend. That's the definition. Dividend includes interim dividend. What is interim dividend? Yes. In between two AGMs, if I get some money, that is called interim dividend. And what is final dividend? Dividend that I give only in the end. So there are two types of dividend, guys. One is interim dividend, one is final dividend. Everything is recommended and declared. Interim dividend is recommended and declared by the BOD. BOD means Board of Directors. In this section 123(3) of the Companies Act. Just for your reference, I'm telling. Final dividend, on the other hand, it is recommended by the board, declared by the shareholders. Recommended by the board under 134(3)(k), declared by shareholders under 102(2)(a)(2), as per reference. So recommendation will be done by one person, declaration will be done by another person. So who will recommend the dividend? Board of directors. Who will declare the final dividend? Shareholders. Whereas in interim dividend, you can't go to the shareholders and ask. Board only will decide, okay, let's give the dividend. Okay, so let's quickly copy this. But in an Income Tax Act also I'll tell you, under Income Tax Act, earlier guys, very interesting, the company had to pay something called as corporate dividend tax, or also called as DDT, dividend distribution tax. If I was distributing dividend, I am the company, I had to deduct tax and then pay you. For you, is it tax free or is it taxable? Tax free, because I have already paid tax on it. So in the 2018 or something, Arun Jaitley ji changed the law. He said, enough is enough. Shareholders only have to pay for dividend. So corporate dividend tax was abolished, and the entire burden was now shifted to whom? Shareholders. And now from even today, if you receive any dividend, shareholders have to pay the tax. Shareholders have to pay the tax. Shareholders did not want to pay the tax. Right? They're like, suddenly, why should I pay the tax? So they started doing golmaal. They went to the company and said, don't pay me dividend. Instead of that, give me one laptop. How much is the dividend? 1 lakh. Give me an Apple laptop. 1 lakh. Chapter close. Give me some shares. Give me some preference shares. Give me some debentures. You buy one asset and give me. Instead of dividend, give me all these things. Is it tax free only? No, because if I'm giving you all these things, because now company is giving. Crazy. It's not individual and all is not giving. Company is giving. Right? You're giving me one laptop instead of dividend. It is not employer-employee relationship also. There is no nexus also. Right? So that's why in 2019, one more change happened. I told you earlier, other gift was only included if it is given by individual. Then what they did? Even if company gifts it like that, it will be taxable. And to make it absolutely clear, they introduced sections from 222 onwards. 222 A, B, C, D, E. In income tax, this 235 is in Companies Act, guys. Companies Act. 222 is Income Tax Act. 222. They inserted 222, definition of dividend 222. 222 A, B, C, D, E, F they inserted. 222 A, B, C, D, E, F is what? That is something called deemed dividend. Instead of paying dividend, companies are starting to distribute the dividend, distribute the assets, distribute the shares. They said cheating. Instead of dividend, you're doing all these things. I'm not going to allow you. So what they did? They introduced a concept called deemed dividend. Is it taxable now in the hands of the recipient? Yes. So today we are going to discuss the concept of deemed dividend. Okay. Before that, copy this chart. Only this part here, the dividend part here. Just for your knowledge, dividend is taxed as per in the hands of the shareholders. As per 1034, it was exempt before. 1150, there was a concept called corporate dividend tax. Do we have anything like that now? No. And what they have introduced, 222 ABCD. This we have not discussed yet. We'll slowly see. What do you mean by corporate dividend tax? Sorry, what do you mean by deemed dividend? We'll see. Right? So, what do we have, guys? We have 222A, B, C, D, E, and F was inserted in 2024. So, what were people doing? They were distributing assets instead of dividend. I told you laptop like that. So, 222A came. They said, if not dividend, instead of dividend, you're taking laptop. Laptop is taxable. Or forget about laptop, you're just, they're distributing some assets of the company. On the asset side, whatever is there, they're distributing that. Yes, then also 222A. Just to make it absolutely clear, it's already there in 56.210. They removed from 56.210 and made it separate section. That's all, no change. Then I'm not distributing asset, they're distributing debentures. They're distributing debentures. So what came? 222B. Then they're reducing the capital. There is something called reduction of capital, which you will learn in law, right? Law has started, no? So you will learn that slowly. So that will come under this one. Then on liquidation, some assets will be distributed instead of, what do you say, to the shareholders. What people will be doing is, instead of giving some dividend, they'll distribute some assets. That is covered under 222D, or like that. We will see everything. So, right. So let's check the deemed dividend concept, 222. So first write down, guys, 222A. 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 I'll just dictate a little bit. If a domestic company distributes assets to the shareholders, if a domestic company distributes assets of the shareholders, then to the extent of accumulated profits, whether capitalized or not, to the extent of accumulated profits, whether capitalized or not, shall be taxable, as dividend in the hands of the shareholders. Shall be taxable as dividend in the hands of the shareholders. Right. So if cash is distributed, then it is taxable. If assets are distributed, that is also taxable. So I told you, instead of money, they gave laptop. Laptop is also taxable. Now you tell me, laptop is taxable. What value will you take? No, dividend I don't know. I have not told only how much I will give. I will simply give you on laptop. Obviously, FMV of the laptop, the fair market value of the laptop. How will I value the laptop? How much it is going to be sold in the market, and what is the rate in the market? So I will not tell I should have paid you dividend of 1 lakh. Instead of that, I will pay you asset. No, I'll just distribute one asset. They'll tell, instead of dividend, I'm giving it to you. Now you have to value. You will go to the market and find out how much is that laptop. It is 1 lakh. So now then you will realize, 1 lakh worth of dividend I'm getting in the form of laptop. So if I give you cash, then cash. If I give you asset, then FMV. That is only given in the next line. You see, read this. It may be noted that if the accumulated profits are distributed to the shareholder in the form of cash, equivalent sum will be dividend. On the other hand, if accumulated profits are distributed in kind, then FMV shall be the dividend, obviously. If I have given you 20,000 rupees, 20,000 rupees is dividend. If I have given you an asset, then I will value the asset and that will be the dividend. Simple. And only to the extent of what, guys? Only to the extent of accumulated profits. Only to the extent of accumulated profit. Because accumulated profits only can be used to pay dividend. If I pay extra, that will not be covered under this section. I'll give you examples. See. Now, I should, what do you say? The only one problem was this, when I am distributing this assets, etc., on which day should I take the value? Is it on the date of distribution or is it in the date of declaration? Which one? I will declare today, distribute 30 days later. That also went to court. You are telling declaration. Somebody told distribution. It went to court, Supreme Court. Supreme Court said it should be on the date of distribution, not declaration. Because distribution time, you don't know what will be the value, so you should see the FMV of the assets as on that day. Company will give their own laptop. That is called distribution of their assets. So, we should always go by what? The accumulated profits, whether capitalized or not. See, there is dialogue you have written down, whether capitalized or not. What do you mean by that? Whether capitalized or not? It means, so guys, you have equity share capital, then accumulated profit, that is nothing but reserves and surplus, 10 lakh. To the extent of 10 lakh, if you distribute, that is deemed dividend. Okay, that is because this is accumulated profit. On the other hand, if you split this equity share capital some amount, bonus shares 8 lakh, accumulated profit after bonus 2 lakh. Basically, I have issued bonus shares and now I'm still giving asset. I'm distributing assets. I'm distributing assets worth 4 lakh. Now my question to you is, should I take deemed dividend only 2 lakh or should I take the full 10 lakh into the picture and 4 lakh out of 10 lakh I should take? What should I take? Full 10 lakh, guys. Because in that 10 lakh, how much am I paying? 4 lakh. Because I don't care what is the split here. That is the dialogue, whether capitalized or not. Don't you think so? Bonus is capitalized profit, yes or no? Yes. So whether you have split it here and trying to cheat the government, I don't care. I will take the full amount here. Accumulated reserves including bonus. That is the most important line here, whether capitalized or not. What do you mean by whether capitalized or not? Whether it is in the nature of bonus shares or otherwise, I will take that entire amount in my calculation of deemed dividend. Calculation of deemed dividend. So what was happening was, first equity share capital was whatever it is, reserves and surplus was 10 lakh. Let's say I am distributing an asset worth 8 lakh. So what would be the deemed dividend? 8 lakh, because 8 lakh is part of this 10 lakh. From this extra money only I can distribute. Now money only is not there, how will I distribute? Now to curb this from happening very smartly, they issued bonus shares worth 8 lakh. Reserves and surplus was 2 lakh. Guys, bonus is just a book entry. Do you agree or not? Yes. Capitalization of reserves. Reserves and surplus account debtor to share capital account. That is the bonus entry. And then still they had money, no cash. So still they had assets of the company. They distributed again asset worth 8 lakh. And then they said to the extent of accumulated profit, only 2 lakh will be deemed dividend. Government said, no, you have just done a book entry to cheat me. So these book entries and all will be ignored. That's why they are telling now what? Whether capitalized or not. That is the important dialogue, whether capitalized or not. Did you get this? Whether capitalized or not. So you should see the entire reserves and surplus, whether it is capitalized or not. Got it? Simple. Only to the extent of that, guys. Otherwise, no. So you see here, for example, book value of the asset is 8 lakh. FMV 16 lakh. Accumulated profits available is 14 lakh. Tell me, I should always take the deemed dividend to the extent of what? Accumulated profit. So what will be the deemed dividend? 14 lakh. Here, book value 8 lakh. FMV 11 lakh. Accumulated 14 lakh. What should I take? 11 lakh. Book value I should ignore. Book value 8 lakh. FMV 14 lakh. Accumulated profit also 14 lakh. Deemed dividend 14 lakh. Deemed dividend 14 lakh. Did you get this? So asset if I distribute, then it is 100% taxable. Write down this example and tell me what will be the deemed dividend, guys. Reserves and surplus is 11 lakh, guys. Write down on top, reserves and surplus is 11 lakh. Reserves and surplus is 11 lakh. Then write down this example. 5 scenarios. 8 lakh, third one, 11 lakh, then 9 lakh, then 4 lakh. Perfect. That is called deemed dividend. Perfect. 11, 8, 11, 9 and 4. Guys, but one doubt I have. In whatever I have marked yellow, 1 and 3, do you want to add anything? Which means I am telling there is something to add. What is it? We have only reserves and surplus 11 lakh. Okay. So, okay. But you see from the shareholder's point of view, how much he was supposed to, basically he was not supposed to get anything, but how much benefit he got now? Overall benefit 12 lakhs. He has an asset with him worth 12 lakh, but he has to pay tax only on 11 lakh as deemed dividend. Do you think Nirmala madam can keep quiet? No. Guys, this is a specific section, 222A. General section is still there, no? Which one? 56 to 10, gift taxation. What does gift tax? I told you yesterday, in gift taxation, earlier it was only allowed to individuals. That was removed. In 2018-19, they removed it. If a company gifts anything to anybody, that full amount is taxable. But in that one part of it, they have made it 222A. Only to the extent of reserves and surplus. But extra 1 lakh, Nirmala aunty will say cheating. So extra 1 lakh will be taxable under which section? 56 to 10. I hope you understand. This is a movable property. Remember, movable property without consideration. How much did I get movable property? 12 lakh. Without consideration, nothing I paid. But in that 11 lakh will be taxable as deemed dividend. Specific section. Since specific section doesn't cover that remaining 1 lakh, 1 lakh will be taxable under general section. Hope you understood. Deadly. There is one chapter called interpretation of statutes for you in law. There is one dialogue, harmonious construction. Harmonious construction means I should read the law both put together. 222A, does it anywhere say it excludes 56 to 10? No. Should both be read hand in hand? Yes. When 222A is read, 56 to 10 also should be read. 56 to 10 says I will not apply as long as 222A applies. Specific section. 222A applies only to the extent of 11 lakh. Chapter close. Extra 1 lakh will now be under the general section 56 to 10. Everyone got this? So guys, whenever the FMV is more than the reserves and surplus, to the extent of reserves and surplus, take. Extra money? Yes. Write down 56 to 10. This is called harmonious construction. This they'll ask in the exam, what is the ultimate taxation? We will forget about 56 to 10 and come. No, copy. Understood, guys? Understood the interpretation, everybody? Yes. So, only one part of it is under 222A. Other part will come under 56 to 10. Right. So, very simple, guys. And the difference and all, don't see after 12 lakh minus 11 lakh. If this is 30,000, no tax, nothing like that. So here it is 12 lakh. Here it is, let's assume 11 lakh 60,000. Or 11 lakh 60 already done. 12 lakh already done. Difference is 40,000. 40,000 not taxable because it's less than 50,000. No. It is always FMV minus consideration. What is consideration? 0. Ultimately 12 lakh has to be taxable. It is split into 2 sections. That's all. So ultimately everything is IFOS. It just split into 2 sections. Did you get it? That's it, guys. That is 222A. Very simple. Next, write down 222B. 222B. Yeah, so this is what? This is assets is not there. I'm giving debentures. So next one, if distribution to the shareholders, if distribution to shareholders is by way of debentures, is by way of debentures, comma, debenture stock or deposit certificates. Debentures, debenture stock or deposit certificates. Right. Then next one, or distribution to preference shareholders. Distribution to preference shareholders by way of bonus shares. Distribution to preference shareholders by way of bonus shares. Then to the extent of what? Accumulated profit. To the extent of accumulated profit. To the extent of accumulated profit. Whether capitalized or not. Whether capitalized or not. Shall be deemed dividend. Shall be deemed dividend. Done, guys. So, second one. Point number A is what? This thing. Distributing the asset. Point number B is what? Distributing debentures, debenture stock and preference shareholders. To preference shareholders giving what? Bonus shares. Have you ever heard bonus shares being given to preference shareholders? No. Bonus shares will always be given to equity shareholders. Now suddenly to preference shareholders you are giving. Now is this deemed dividend? Yes. You are doing something different. You are giving bonus to preference shareholder, which means you don't want to give dividend. Instead of that, you are giving shares. Similarly, to the shareholders, you are giving what? Debentures, debenture stock, deposit certificate, because you don't want to give dividend. Instead of that, you are giving what? Debentures. So all these things, to the extent of accumulated profit, whether capitalized or not, shall be taxable in the hands of the shareholders. Same thing. So 222A is giving asset. They stopped giving asset now. They started giving what? Debentures. Started giving what? Deposit certificate. They started giving what? They started giving bonus to preference shareholders. Nirmala madam is like, what? I've never heard of this concept. Why are you giving? Then they dug into it. Then they realized, oh, instead of dividend, you are giving all these things. Cheating. It will be taxable in whose hands? Recipient hands. That's all. So you see, bonus to equity shareholders, is it dividend? No, that's not deemed to be dividend. That is bonus. So you can give bonus to equity shareholders. When is it a red flag? Bonus to preference shareholder, that is a red flag. That is cheating. That I will not give. Online people, are you with me? These fellows are also. Oh, okay, super. Thank you. Cool. Moving on. So 222B is there, 222A is there. All that is fine. Next, guys, 222C. 222C is what? This is for liquidation. Write down, guys. 222C. So when I go for liquidation, no, that 222C will come. Distribution in the case of liquidation. Distribution in the case of liquidation. 222C. If you remember, in capital gain, one part we had not done in the last page. There was something called liquidation 46.1. I told you when we come to IFOS, we'll discuss. So today we'll discuss that. So 222C, distribution in the case of liquidation. So guys, 222A is distribution of asset. 222B is distribution of debentures. 222C is distribution of anything. It could be cash, it could be asset, it could be cash plus asset, anything. Same, reserves and surplus whether capitalized or not. Distribution should always be made to whom in liquidation? To the equity shareholders, not to the preference shareholders. So, three things are covered here. You can first write down. What do you mean by what all are covered? First of all, reserves and surplus whether capitalized or not. Second one, any distribution. Any distribution. Cash, asset, cash plus asset. Third one, distribution to whom? Equity shareholders, not to preference shareholders. Right? Copy. Got it, no? Reserves and surplus, any distribution. Now, guys, tell me, what do you mean by liquidation? Liquidation means is a procedure where the company wants to come to an end. So, the entire proceedings, step by step method, that is called winding up. When the process begins, it's called liquidation has begun. And each and every step is called what? Winding up. And lastly, when the company's name is struck off from the register, that is called dissolution. So three things. So if I can liquidate, let's for example, on 14th October 2022, liquidation proceedings have started. The entire thing is called winding up proceedings. When is it struck off? 10th October 2024. My question to you is, reserves and surplus and all, I should see on which day? Date of liquidation commencement or date of dissolution? Liquidation commencement or dissolution? Right, you are right. It is on the date of commencement of liquidation. That is which day? 14th October 22. I should see on that day only, because guys, on the last day will I distribute or first only I'll distribute? First only. That is cheating they are doing. Instead of paying it to the outsiders, they are distributing it to the insiders. I know today my company is going down. Equity shareholders are coming and telling, boss, you pay me. Creditors are standing outside. I should pay creditors first or insiders? Creditors. But what I'll do? I'll distribute to insiders first. That's why cheating. That's why deemed dividend. If you take any amount from the day of liquidation commencement, amount, asset, whatever, that is cheating. That is deemed to be dividend. Did you understand the logic why? Yeah. Why? I should first pay the outsiders. Why will I pay to equity shareholders? They are the owners of the company. Yes or no? Yeah, copy. Everyone understood you? Guys, now, one second. On the date of commencement. Now, guys, very simple, guys. If the company gives assets on liquidation to somebody, then the receiver will have to pay tax as per what? Gift taxation. Now, even if this section was not there, would you not have charge tax under 56.210 only? Yes. Why? Because I am giving gift of what? For consideration, without consideration, without consideration. Of what? Movable property. Cash is a movable property, other assets, or cash also I may give, or movable property also I can give. I'm giving the same thing. So, I would have given it under 56 to 10. 222C. Right? 222C. Okay, one more thing. 222A. Am I not giving asset? Yes. 222C also I am giving asset. But 222C is for liquidation. 222A is for normal things. Right? This is for the receiver's point of view. What about company's point of view? Company is gifting. Will it be tax for them? No. Right? So, company during liquidation, when it gives assets or cash to shareholder, company during liquidation, when it gives assets or cash to shareholder, I'll make you write, don't worry, will capital gain tax come for company because they are giving it free of cost? Ideally, it will come, no, because they are giving something. SDV is 10 lakhs. They are giving it at 0. What will be the FVOC? SDV it should be. Immovable property means. Movable property means normal property, it should be again FMB. But 46.1 says no tax. 46.1 says no tax. This part we did not do in capital gain. I am doing it now. 46.1 it says no tax because 47 says it is not a transfer. 47 says it is not a transfer. Will capital gain come? No capital gain. No capital gain for whom? For company. So 46.1, 46.2. 46.1 says for company no tax. 46.2 for shareholders there is tax. For shareholders there is tax. So for shareholders what tax will it be? It will be under 222C. 46.2 just says for shareholders it is taxable. How much? Come to 222C. 222C technically, guys, replaces 222A. What is 222A? Distribution of asset. Distribution of asset in liquidation is 222C. That's all. Specific section will override the general section. Taxability of, what do you say? Taxability of gift is ideally given in 56 to 10. But for liquidation, there's a different section, 46.2. Taxability of any gift for a recipient is given in which section? 56 to 10. But for liquidation, we have a separate section, 46.2. That's all. So 46.2 replaces 56 to 10. And 222C replaces 222A. That is the logic. Concept is the same. No change. Section number different. If I distribute assets, 222A. If I distribute assets in liquidation, 222C. Right? 46.1, no tax. 46.2, it replaces 56.210. Right? Yes. Copy, guys. Example. So example on liquidation. Liquidation date is 30/6/2020. I'll explain the full thing. Then you can copy. Balance sheet of Chaprasi Private Limited. Correct name. Going for liquidation, no? Yes. So balance sheet as under equity share capital 4 lakh, reserves and surplus 2,20,000. Cash 3 lakh. Asset 3,20,000. Totally how much? 6,20,000, 6,20,000. Okay. Any doubt in this? I'll give you time to copy. Don't worry. Shareholder PVRK. 4 shareholders are there. 1 lakh, 1 lakh, 1 lakh, 1 lakh. So capital contribution is there. 4 lakh each. So liquidation date 36/2020. Balance sheet as under equity share capital 4 lakh, reserves and surplus 2,20,000, cash 3 lakh, asset 3,20,000. So shareholder PVRK 1 lakh each, capital contribution. Distribution on 14/2/21. Distribution happened on 14 to 20 because it was liquidation. Each shareholder got what? Cash of 75,000, asset. Book value 50, market value 2 lakh. Book value 50, market value 2 lakh. So what I should take always? Market value. As on which day? Date of commencement of liquidation. That is which day? 14 to 21. Correct? 14. This is the distribution, entire timeline. What is the taxability for Chaprasi Private Limited? As I already told you under 46(1), it is exempt. 46(1) exempt. What is the taxability of all the shareholders? What is the total amount of distribution? Very simple. 75,000 into 4 plus market value 2 lakh into 4. Total distribution is 11 lakh. So step number A will be taxed under two sections, 46(2) and 222(c). 222(c) will be till the extent of accumulated profits. Correct? So here taxability, if you see in this particular one, we created this one doubt, no? Here this one. Same example, you see. 222A was deemed dividend. In liquidation, 222A will become 222C. And that extra amount, 1 lakh, 3 lakh, that extra amount will, instead of 56,210, it will become 46,2. It will become 46,2. That's all. Same example, copy paste. Assuming this is liquidation, 222A will become 222C. And 56,210 will become 46,2. Ultimately, concept is the same, calculation is the same, section number is different. Section number is different for what? Liquidation. Section number is different for liquidation. Right? 46(2) simply says it is taxed. Where? How? First it is taxed under 222C. Any balance, if any, will be taxed under 46(2). So here, what will be my overall distribution in my example? 11 lakh. But this 11 lakh will be taxed into two things. One, as per the accumulated profit. One more is other than accumulated profit. You see in the balance sheet, what is the accumulated profit? Only 2,20,000. To the extent of 2,20,000, it will be taxed under 222C. Balance will be taxed under 46(2). So no, balance will be taxed under 46(2). And for the shareholder, each shareholder, deemed dividend will be what under 222C? 2,20,000 divided by 4. Yes or no? Yes. Why? Each shareholder. This 2,20,000 is for all shareholders put together. Each shareholder, deemed dividend 55,000. Under 46(2), what will I take? Under 46(2), FMB, I am getting what? 2 lakh. FMB of the shares here, asset. FMB of the asset, 2 lakh. Cash, 75,000. Total, each person how much is taking, guys? 2,75,000. Yes. Less. In this 2,75,000, deemed dividend under other section is already calculated. How much? 55,000. This one already calculated. No, I should subtract. This is the only thing I am getting. I am getting 2,75,000 from company. In that 55,000 is already taxed under another section. Which section? 222C. So the balance FVOC will be 2,20,000. And now this is the FVOC. But I have to subtract the cost also. Now what is the cost? Capital invested. How much I invested? 1 lakh. For that I have to give indexation. Indexation. Yes or no? Index, because when did I invest in that capital? Long time back. But if the liquidation happened after July 24, indexation also is not there. No indexation for anything. No, remember? No indexation for anything. So, but in this happened in which year? 21. Indexation was there or not that time? Yes. LTCG or STCG will come. That's all. So I'll again repeat quickly. Go through. And then you can copy. Important example. First liquidation date is 36/2020. Will indexation come? Yes. Balance sheet as under. This is the balance sheet. Each shareholder had invested 1 lakh each. Distribution is on 14 to 21. Each shareholder is getting 2,75,000 overall. 2 lakh market value, 75,000 cash. Taxability for Chaprasi Private Limited. Taxability for all shareholders. Total amount of distribution 2 lakh into 4 plus 75,000 into 4. Total 11 lakh. Step A will be taxed under 46(2) and 222C. 222C will be to the extent of accumulated profit, that is 2 lakh 20, and balance will be taxed under 46(2). Overall 11 lakh. 11 lakh in that 2 lakh 20,000 222C, remaining 8 lakh 80,000 46(2). Why? Only to the extent of accumulated profit. Now this 2 lakh 20 will be divided by 4. Each person has to pay 55,000. But what is the taxability for each shareholder? Because he is getting 2 lakh and 75. 2 lakh 75 is getting, which is fully taxable. But in which 55,000 is always already taxed under 222C. Remaining will be taxed under 46(2). So 2 lakh 75 minus 55, for 46(2) the FEOC is 2 lakh 20,000. 46(2) is capital gain. Minus indexation I have to give 1 lakh. 1 lakh indexation will be from the till the date of distribution. You see, reserves and surplus should be taken on the date of commencement of liquidation, but FMB of the asset should be on the date of distribution. And indexation I will get into indexation. Indexation will be year of distribution divided by year of investment. Here year of distribution is 21, 22. Year of investment can be whatever. You will see that they'll give in the question. Then balance will be what? Long-term capital gain or long-term capital loss. Yes or no? Easy. Copy down, guys. Then can go for a break. So that was regarding the liquidation. Next one, write down, guys. 222D. Internal reconstruction. 222D. Internal reconstruction. Or basically you can call it reduction of capital. Reduction of capital. Reduction. 222D, reduction of capital. So you can write down any distribution to shareholders. Any distribution to shareholders on account of any distribution to shareholders on account of reduction of share capital. Any distribution to shareholders on account of reduction of share capital. To the extent of accumulated profits. To the extent of accumulated profits. Whether capitalized or not. Whether capitalized or not. Is taxable as deemed dividend. Is taxable as deemed dividend. Right. If the distribution is linked to capital, then capital gain will apply. If the distribution is linked to capital, then capital gain will apply. Capital gain will apply. Section not applicable to. Section not applicable to. What do you say? Preference shareholders. Preference shareholders. Done. Now, what is this, guys? See, internal reconstruction is nothing but legal begging. To be honest, it is legal begging. Have you started internal reconstruction in accounts? You already know that, so no tension. So so it becomes very easy for me also to help you understand. What is it? You will go to creditors,
Excuse me,
preference
sir.
shareholders, equity shareholders and beg, sir, please give money. Or if don't give money, at least whatever you have, whatever I was supposed to give you, you have to supposed to give me, that will reduce something. And that reduction in that begging bowl you will collect, and that begging bowl is called capital reduction account. And from that you will knock off all the fictitious assets, losses, and clean the balance sheet. That's as simple as that. Now the question is, when I'm going and begging you, and you will say, okay, I will give you 5 lakhs discount. You will ask, if I give you 5 lakh discount, what else will you give me in return? I'll give you 5 lakh discount, okay, but I need 50,000 worth of shares. I need 1 lakh worth of debentures. Now, this is a benefit to the shareholder or what? Yes. That is covered under 222D. So, in exchange for reduction of capital, if you give anything, Nirmala aunty will be waiting. See, in accounts, you will do all the entries, you will do capital reduction account, other things you will do. But this will be different, right? Very, very simple. This would be a different thing. Okay? Not audible. Okay, let me see. Am I audible now? Am I audible, guys? Online people? Yes. Okay,
Yes, sir.
understood. Fine, fine. I
Thank you,
don't
sir.
know. Okay, okay. Thank you. There was, I think there was some problem. Now it's fine. Some student called me and all. Okay, okay. It's coming now, right? Thumbs up. Cool. So I was just saying, guys, just I'll quickly repeat. Under 222D, it is distribution in case of reduction of capital. So what is this? It's very simple. During internal reconstruction, when I go with a begging bowl to all shareholders and all preference shareholders, creditors, and they give some benefit to me, 5 lakh rupee discount, 4 lakh discount, 3 lakh discount, like that, they'll give me discount. I will ask them, what will I get in return? So then the company has to give something in return. When the company gives something in return, Nirmala aunty will be waiting there to tax. That is 222D. So any benefit given by the company to the shareholders, equity shareholders, creditors, etc., will be deemed to be dividend. But creditors are not covered because creditors anyway will have to get a benefit because they are letting go of 5 lakh and getting some 1 lakh. So that's not benefit. But for shareholders, there is a benefit. So this will not apply to preference shareholders. It will apply only to equity shareholders. For them, it will be deemed dividend, right? That's all. Very simple. So for them, it will be deemed dividend. So any payment that they are getting will be any company, anything that will be deemed dividend. So for example, if you see 222 ABCD, same thing, all domestic companies, and it is for accumulated profits, whether capitalized or not. But guys, so if you see 222E on the other hand, it is for closely held companies. We'll come to that. 222 ABCD is all domestic companies, whether capitalized or not, accumulated profit. ABCD. A is for what? Asset. B is for deposit, debenture, stock. C, liquidation. D, internal reconstruction. So now write down 222. D is very simple. That's all. Next write 222E. 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 So guys, this you can write down. If you see 222 ABCD, that is for all domestic companies. That is for all domestic companies, and that is for accumulated profits, whether capitalized or not. But 222E is only for closely held companies. Two 22E is for closely held companies. What are closely held companies? Unlisted companies. And here guys, accumulated profits, whether capitalized or not, is not there. It is only accumulated profits. Capital profit is ignored. For 222E, capital profit is ignored. For 222E, capital profit is ignored. Right, ABCD, all domestic company, accumulated profit, whether capitalized or not. 222E, closely held company, again accumulated profit, capital profit is ignored. Closely held company, unlisted company. So 222A is what? Asset. 222B is what? Debentures, everyone. Bonus only to preference shares. 222C is liquidation, any asset. 222D is any asset, reduction of capital. 222E, on the other hand, is something different. Closely held company, that is unlisted company. Basically, if you see, loan or advance given to shareholders or to a concern. So guys, asset done, shares done, cash done, deposit done, all that. Now company started giving loans. I don't want to pay dividend. Instead of dividend, what will I give? Interest free loan to you. After 1 year, I will waive off the loan also. So basically, instead of dividend, I gave you loan, 1 lakh. I paid repayment terms, within 2 years you need to pay. What is interest? No interest. And then after 1 year, I'll say, okay, no need to pay me back the loan, keep it. It is cheating on, indirect way of giving dividend. So to curb that from this, which companies were doing it? Closely held companies, unlisted companies, means private company and unlisted public company. Cheating. That's why loan or any advance given to shareholder. Loan is, any money given in cash or in kind also, but the receipt should be in cash only. Advance is what? Probably for some service that you are going to be rendering, I'll give you an advance. Right? So I told you I have to give the consultancy thing. I'll take an advance first. That's not a loan, it's an advance. So like this, if you are giving to shareholder or any concern means any other entity in which the shareholders are interested, then that is also cheating. To the extent of accumulated profits, it will be deemed dividend. So the structure I'll explain, then you can copy. See, first of all, various things are covered. First of all, shareholder must be there. Closely held company is giving loan to this shareholder only. 222E is covered. Point number 1. Closely held company is giving loan or advance to this shareholder. 222E will come. Closely held company means what? Government company, private company, Section 8 company. GCC means government controlled company and unlisted company. I repeat, government company, private company, Section 8 company, government controlled company and unlisted company. GCC means government controlled company. Government company, private company, Section 8 company, government controlled company and unlisted company, all put together. And shareholder is giving back and shareholder should be holding 10% or more equity share in the company, that is on the date of the payment of the loan. So closely held company is giving loan to shareholder, not some normal shareholder. The shareholder should be having how much? 10% or more in the equity share of the company, then it is deemed dividend. Point number 1. Second one is what? shareholder is giving, say shareholder already has substantial interest in some other concern. Concern means what? Firm, HUF, AOP, BOI, company, all these things. And the shareholder is investing in how much? 20% of the income or the profit sharing ratio of this concern. And the closely held company is giving loan or advance to this concern. Then also it is considered as 222E. In the hands of the recipient. Who's the recipient here? Concern. Who's the recipient here? Shareholder. So two people are taxed, guys. Two types of people are taxed. Two types of people are taxed. Who are taxed? First is shareholder. Which kind of shareholder is? He should have 10% or more in the equity share of the company. And the company is giving loan or advance to him. So this is the first type of people who are taxed. Second type of people, company is not giving to shareholder. Company is giving loan or advance to some concern. What is concern? Firm, HUF, AOP, BOI company. But in this concern, shareholder is having substantial interest. What is substantial interest? 20% of the income or 20% of the profit sharing ratio is controlling. Basically 20% of the voting power he has, because of which 20% income is getting. Firm, HUF, AOP, BOI company. Now these two people will be taxed under 222E. 222E. Hands of the recipient. Who is the first recipient? Shareholder. Which kind of shareholder? He has 10% equity share in the company. Second one, instead of giving to that shareholder, they are now giving it to whom? Some concern. And in that concern, how much shareholding I have? 20%. Firm, HUF, AOP, BOI company. So closely held company giving loan or advance to that shareholder. Loan or advance to that concern. Government, private, Section 8, GCC, unlisted. In all these cases, what will happen, guys? 222E will come. Did you understand the structure, all of you? Yes or no, all of you? Yes. Please copy. Okay. Yeah. So closely held company, shareholder. So closely held company, two types of people are covered. One is this guy, shareholder. One more is what? Concern. So concern, one is loan or advance given from closely held company to this guy. One more, closely held company is giving loan or advance to the concern. And what is this concern? Firm, HUF, AOP, BOI, all these things. No change. 10% or more equity share. Which date? Payment date. Payment date is what we need to see. Government company, private company, Section 8 company, GCC, unlisted company, all these things. Now, see, it is on the date of the payment, no? People were still doing scams. What they were doing scams? I held 99.99% share in the company always. If the company gives loan to me, is it deemed dividend? Yes. Very smartly, on the day I am taking the loan, no, I'll give some 15% to my friend or 15% to my relative. I will gift. Is gift a transfer? No. So as on the date of receiving loan, what is my percentage? 89%. My relative has 11%. I will take the loan. After taking the loan, next day, my relative will transfer back the shares to me. So is it transfer for me? No. Is it transfer for him? No. Company, when it is giving me the loan or advance, is it deemed dividend? No. Why? As on the date of giving the loan, what is the rate? What is the shareholding that I have? Do I have 10% or more? No. Because my shareholding will be, what do you say, less. I mean, 89% I'll transfer. 91% I'll transfer. Sorry, I'll only be having 9% shareholding. So I'll be gifting my relative 91% on the date when I'm receiving the loan. After receiving the loan, I'll take back 91%. Normal gift, that's all. So as on receiving the loan, what do you think? Will I have more than 10% or less than 10%? Less than 10%. So I'll tell deemed dividend will not apply. Scam number one. Right? So many scams. Everything has been curbed now. So they are telling no, that is fine. Yeah. Then I will give loan to whom? I will give loan to my friend. I will not take loan. See, I should take loan or my concern should take loan. I will not take loan, concern will not take loan. Who will take loan? My friend. Tomorrow my friend will give it to me. That's all. All these people were doing. But now the government has told nothing doing. They've used the words directly or indirectly. Can you take like this directly or indirectly? No, not possible. So that is what it is. So all these things, guys. That is 222E. So 222 is that only. Basically, all these things. You see these examples. For example, here you see 9.13. Closely held company Xerxes Private Limited is giving loan to Mr. Kilol, who is a shareholder. Who is this Kilol? He is having 10% voting rights in the company. So is it deemed dividend for him? Yes. On the other hand, he owes payment to Mr. Zatura, and closely held company is giving loan to him also. Because I have to pay him. Instead of that, I'll tell the company, you pay my friend also. I told you, Golmaal they were doing. Is it allowed now? No. This is also deemed dividend. On the other hand, the company, closely held company, point number 2, is giving loan to any other concern called Zavi and Sons. In Zavi and Sons, Mr. Kilol, shareholder, is holding substantial interest. Substantial interest. So what do you think? In all these things, it will become what? Deemed dividend. Very simple, guys. Examples are there. You can go through later. No issue. So basically, a revision of everything. 222A to E. Always accumulated profit. We have to see. ABD, it is accumulated profit on the date of distribution. 222C on the date of liquidation. 222E is the date on which loan or advance is given to the shareholder. Loan or advance is given to the shareholder. These are the things that I need to see. Very, very simple. Now, this particular year in 2024, they created one more thing, guys. They created one more thing. And that is what? They have created buyback of shares. They have created something called buyback of shares. Now, what is buyback of shares? Company will buy back the shares at some rate. Is that dividend? No, I have purchased the shares for 100 rupees. Tomorrow, Infosys is buying it back for 140 rupees. That 40 rupees is a dividend. No. Correct. So, in the new law, Nirmala Madam has introduced buyback taxation, which little bit we will discuss now. Buyback of shares. So there is a date given, 39/2024, and after that 1st October 2024. I'll explain that. So the buyback concept has been introduced. 30 and other things. I'll discuss that. Right. So, guys, unfortunately, since we are discussing Finance Act 24, we need to remember both. Earlier, till 30th September 2024, guys, company was paying something called as, buyback tax. So they were paying buyback tax at what rate? 23.296%. So if Infosys were to buy back the shares, right, they were deducting tax. They were paying tax and giving the full money to the shareholder. You purchased Infosys shares at 100 rupees, and later company is buying back at 150 rupees. So Infosys will pay on that difference 50 rupees tax to the government and give you full 50 rupees. And for you, that 50 rupees is exempt. Because who has paid tax on it already? Company. This is like same like dividend used to be. But in Finance Act 2024, from 1st October 2024, Nirmala Madam has told reverse. What? Recipient should pay tax. Company need not pay tax. Recipient, you can't understand only. Why should I pay tax? Her logic is simple. If you sell the shares outside, will you pay tax? Yes. Correct or no? If you sell the shares outside, you will pay tax. Now you are selling it to the company only. They are buying back the shares, so pay tax. Will capital gain come or income from other source will come? You are 100% selling the shares. Capital gain should come. But did you sell it out of your own interest? No. Company issued buyback, so you're doing the buyback. So she created one more section, 222F. Under 222F, she is telling it is buyback. It is not there in the book. I'll dictate and I will make you write. Don't worry. So write down, guys. First one, buyback of shares. Buyback of shares. And write down 222F. Buyback of shares and write down 222F. Write down buyback of shares and say 222F. I'll make you write that dialogue. Make you write the dialogue 222F. Write down any payment by a company. Any payment by a company to its shareholder. To its shareholder. Any payment by a company to its shareholder on purchase of its own shares. Purchase of its own shares. Correct? Will be taxed as deemed dividend. Will be taxed as deemed dividend. Under 222F. Under 222F. So guys, now what is the scene? Nirmala aunty says, company, you don't pay 23%. I will take money from whom? And there is no tax rate. It will be added to whom? The entire slab rate. And you have to pay the normal rates of slab. Basically, IFOS, there is no rate. IFOS is always added to the slab. That's all. Is there any specific rate? No, we never discuss any tax rate here. It's added to the slab. So this is a huge change in 2024. So now you write down this chart. I have made this chart specially for you. Very easy. So till 2019, what was there? After 2019, what was there? Like that. Write down buyback of shares. Buyback of shares. One is 2019. Buyback of shares 2019. That is one. Listed company. Then unlisted company also was, unlisted company also can buy back. Unlisted company also can buy back. Buyback of shares listed 2019, unlisted is there. So, see guys, here till 30th September 2024. I'll explain, then you can copy. See, till 30th September 2024. 115 QA. Company will pay tax at what rate? 20% of distributed income plus surcharge and cess mandatory. It doesn't depend on which type of company and all. 100%. 23.296%. Then exempt in the hands of shareholders under 1034 capital A. Distributed income, buyback price minus share issue price. What did I tell you? 140 was what they bought it back for. 100 was the initial amount. 140 minus 100 on 40 rupees. You will have to pay 23.296%. Is buyback deemed dividend? No, buyback is not deemed dividend. This is till which day? All buyback done till 30th September 2024. Sir, why should I study all this? Unfortunately, your previous year is 24-25. So in the exam, if they give you anything till 30th September, this one. But 99.99% they will give you the amendment. What is the amendment? We'll see. But this is the old one. You should know both. Only for this year, 24-25, you should know both. Next year onwards, you don't have to remember this. Next year onwards, only new provision. But your exam is when? Yes. So you have to follow which one? This one. You have to study both. Understood? Copy this. Then I will show you after buyback. Copy this. Did you understand? This is till 30th September only, guys. Till 30th September. After 110-2024, Finance Act 24 says 115 QA not applicable. Are you guys done? 115 QA not applicable, guys. Then what has happened? 222F inserted. Buyback is deemed to be dividend. Buyback is deemed to be dividend. And there is no, this you can ignore, no problem. You need not write this down. Section 57. Buyback payout is taxable as deemed dividend at normal rates under IFOS head. There is no expense allowed. So, guys, is it capital gain or IFOS? IFOS. This also you write down actually. 46A. FEOC is deemed to be nil. Think about it. I bought that share for 100. Company is buying back for 140. Actually, as per normal law, capital gain, what will you do? 140 minus 100. 40 is capital gain. Now they are telling FEOC, you make it 0. Weird. See, I'll tell you. Beautiful it is. I'll give you an example also. Don't worry. It's very interesting. Hear me out. See, normally what you will do, guys? If I sell for 140, selling price is 100. 40 will be capital gain. Chapter close. Till 2024, this 40 was exempt. Why? Because company was paying tax. Did you understand this? Company was paying tax, so for me it's exempt. Now what they are saying, this entire 140 rupees is deemed dividend. You will go to Nirmala auntie and say cheating. Why? I have paid cost 100. It should be 140 minus 100, 40. You are making full 140 taxable. Nirmala auntie is telling in capital gain, show consideration as 0. What is cost? 100. What is capital loss? 100. Nirmala madam is telling 140 is income from other sources. 100 is capital loss. What is the net effect? Anyway, 40. But this 100 loss you carry forward. Next time when there is a gain, you set off. Can you set off capital loss with income from other sources and all? No. You can't set off. But what is the net effect? You're right. Net effect is 40 only. No doubt about it. Net effect is 40. But can you do it this year? No. She is telling keep it separate. Capital gain, show it as a loss, 40. It's not a gain, it's a loss. Show it as 100, sorry. 0 minus 100, 100. This thing, income from other source, don't show 40. Income show full amount. How much is it? 140. Pay tax on 140, forget about it. tomorrow, whenever there is a capital gain, you can easily set this capital loss and you can decrease your capital gain later. Ultimately, benefit is the same only, but you may not get it this year. You may get it in the future. But this year, how much you have to pay tax on? 140. Did you understand the logic? We'll do a sum. But did you understand the logic? Yes. Ideal route, earlier 140 minus 100, 40. Ideally, I should have paid tax on 40. But Nirmala madam said, no, company will pay tax on 40. For you, it's exempt. Now, when you're bringing it to tax, ideally, it should have been 140 minus 100, 40 I will pay tax and close it. They said, no, pay tax on 140. And this 100, what will you do? Capital loss, which will be carried forward future and set off. We'll do a sum, but before that, this is the thing. So under 46A, guys, FEOC is nil. Why nil? Because everything is taxed under buyback, IFOS. So here, buyback payout is taxable as deemed dividend at normal rates and no expenses allowed. Under capital gain, FEOC is nil. Cost of acquisition, something. Full capital loss. It will be allowed to be set off in which year? Future gains when they are there. We'll do a sum. And lastly, section 194, TDS also will come 10%. At TDS chapter, we'll understand that 10% at the time of buyback, company has to deduct the TDS. Company will deduct TDS, guys. Okay, that TDS chapter will understand. Did you understand now? On full 140, there is tax. Who is paying 140 rupees? Company. And you have to pay tax on that at what rate? Slab rate. But when the company is paying 140 rupees, no, 14 rupees they'll deduct and pay. Why? TDS. This in TDS chapter you will understand. You ignore it now. You copy down, but you ignore. Everyone got it? Please copy. So, you see explanatory memorandum, no? Nirmala madam will give explanatory memorandum of Finance Act 24. Anybody can access this. Right. So, in this only, she has given one, this thing, example. So, I just open that so that I'll show you. So, she is given an example for buyback. We'll copy that example only. I'll explain that, then you can copy. Right. This example, guys. So, check it out. 100 shares bought in 2020, 40 rupees per share. Total cost of acquisition, 4,000. Then 20 shares bought back in 2024. 60. So what is 60 into 12 income tax? So basically entire amount is taxable as dividend. 60 into 20. 1,200 is taxable as deemed dividend. What is the capital loss? Loss will be FEOC 0. minus cost. Cost will be how much, guys? 40 rupees per share. 40 rupees per share into how many shares? 20 shares. 40 into 20, 800. This 800 will be used later. So 50 shares are sold in 2025, assume. 50 shares are sold in 2025. 70 into 50, 3,500. Minus the capital gain. 2,000, how did you get? 50 into 40. How is 2,000 you are getting? Cost 50 into 40. This is 50 into 40. This is 70 into 50. 1,500. But I have to set this off against the capital loss. 1,500 minus 800. So in later stages, I will allow you. But full capital, the full amount, that is 20 into 60 will be my deemed dividend. Understood? Understood all of you? Copy down the example, guys. Given by Finance Act. Done, guys? Yeah. That is regarding the buyback. So next, write down, guys. Buyback done. Next. Other cases. Other cases. What are other cases? Yes. First one, gift taxation. Already done. Yes or no? Yes. Gift taxation. Write down. Gift taxation already done. Write along with me only. Gift taxation already done. Second one, dividend already done. Dividend also we just did. Dividend is always taxable under IFOS. Dividend is always taxable under IFOS, even though the shares are held as stock in trade. Dividend is always taxable under IFOS, even though shares are held as stock in trade. Income from UTI or mutual fund. Income means return. Return from UTI or mutual fund. Taxable. Right. Next. Income from UTI mutual fund taxable. Income of MP, MLA, MLC. Income of MP, MLA, MLC. These fellows get salary, guys. Imagine. After all the looting that they do, they'll still get salary. That is under IFOS. Plus, they will get daily allowance and constituency allowance. Thousands of rupees they'll get. That is all exempt. Crazy. Salary is taxable under IFOS. Daily allowance and constituency allowance exempt under 1017. exempt under 1070. Right, next, awards. Awards from government, guys. Bharat Ratna, Padma Bhushan, Khel Ratna, Arjuna Award, all these are exempt under 1017A. Other awards, IFOS. Bharat Ratna, Padma Bhushan, Khel Ratna, Arjuna Award, exempt under 1017A. Other awards, IFOS. Other awards, IFOS. Next one, winnings from lottery, crossword, puzzles, general game show, horse race, all IFOS. Only for this, guys, flat rate is there, 30%. We have seen it already. Lottery, crossword, puzzle, horse race, all that is direct IFOS, 30%. Next, agricultural income. Agricultural income. From land in India, exempt under 10.1. From land outside India, IFOS. Correct? If you are land in India, exempt under 10.1. Land outside India, IFOS. From land in India, exempt. Land outside India, IFOS. So, guys, if I am having agricultural land in UK and I'm getting money, obviously it is income from other sources. Rental income. Rental income. From house property, guys. Income from house property, obviously. Rent of asset other than house property. For example, if I give car on rent, or if I give, what do you say, this building, if they give one room on rent to somebody else, like subletting, example, that is also IFOS. Rent of asset other than house property, IFOS. Subletting, IFOS. Subletting is what? KSA subletting one of their rooms to some other academy, IFOS. composite rent where agreement is not separable. That is also IFOS. So KSA will give their entire floor along with the benches, along with the projector, along with the AC. Is it separable? Can I rent benches separately? No. Everything is what? IFOS. Royalty of books, IFOS. Royalty books, IFOS. Means if I sell book, I mean, if I sell books and I get royalty, no, that is IFOS. That's not my business. Guys, a director getting remuneration. Director getting remuneration as an employer, then salary. As a consultant, then PGBP. But if he's getting sitting fee for board meeting, that is IFOS. For board meetings, he will get sitting fee. That is IFOS. So director will get remuneration as an employer, salary, consultant, PGBP. Sitting fee, board meeting, IFOS. Guys, ICI, next one. ICI, if I do invigilation, paper setting, evaluation, all this is IFOS. So CAs will get money for invigilation, paper setting, evaluation. One of my seniors still goes for invigilation because when he was writing CA, one person had come and helped him. He was full tensed, my friend, my senior. So that other invigilator came and told, don't worry, it's okay, you will pass and all those things. So then he actually passed that exam. And out of tension, he was very sad and nervous. So after that, he promised that he will go every year. So this guy goes every single year, even though he's very busy. They pay some 800 rupees per hour, guys. What is 800 for a CA? But he goes because somebody else helped him, no? So he's going and helping other students. He'll not go give chit and all, not that help. Help means moral support he will go give. Invigilation, he does that. Paper setter, evaluation, all these things. IFOS. Keyman insurance policy. Keyman insurance policy. Received by employer, PGBP. Amount received by employee, salary. We have discussed this in section 28, PGBP. Amount received by any other person, chairman emeritus or family members, that is IFOS. Maturity amount of life insurance policy exempt under 1010D, except Keyman insurance policy. We have seen this already in PGBP, guys, if you remember. Copy. I'll give you time, 1 second. After that, guys, this one I'll just explain, then you can copy. Family pension is taxable. Exemption is 1/3 of family pension or 25,000 per annum as per Finance Act 2024, whichever is less. It is only if you opt for 115 BAC. If you don't opt for 115 BAC, what is 115 BAC? New regime. Basically, if you are using in the new regime, you will get. Old regime, you will not get this. So, example, 90,000 if you get family pension, 1/3 of 90,000 or 25,000, whichever is less, is what you will get as a benefit. Okay. So, that is 90,000 minus 25,000, 65,000 will be taxable. Exemption is how much? 1/3 or 25,000, whichever is less. Earlier it used to be 15,000, increased to 25,000 from Finance Act 2024. So you can copy both Keyman insurance and this one, both. Done. So guys, Keyman insurance policy is done. Family pension is done. 1/3 of family pension or 25,000, whichever is less. 90,000, 1/3 of 90,000, 30 or 25,000, 65,000. Next. Guys, what do you get if you get, gallantry award? Like soldiers will get, no, Padma Bhushan, and after their death they get, no, gallantry for bravery award, not Padma Bhushan, sorry, what am I saying? Paramavir Chakra, Veer Chakra, all those things. That when they get pension, no, thankfully, fully exempt. So write down, if a soldier gets gallantry award, you can say if a soldier or is, okay, a soldier gets gallantry award. If a soldier gets gallantry award means what? Veer Chakra, Paramveer Chakra, Sena Medal, all those things. If a soldier gets gallantry award, GALLANTRY, then the family pension paid to him or his family is fully exempt. Family pension paid to him family pension paid to him or his family pension paid to him or his family is fully exempt. Got it, guys? Next, interest. See guys, interest received from gold bonds 1999, gold monetization scheme, but then your PPF, that is your provident fund, all these things now fully exempt. Interest on late compensation on compulsory acquisition of property. This you have seen in capital gain. Late compensation, if you get on acquisition of compulsory acquisition, they'll give you some money. We have discussed 50% is the exemption. 50% is taxable. If you remember, taxable interest into 50%. Other interest fully taxable. Post office savings account exempt up to 3,500 rupees. Joint account exempt up to 7,000 rupees. Remaining one will be taxable. Then advance money forfeited on or after 1/4/2014, if you already remember, as per 5629, taxable. Advance money forfeited before 1/4/2014, they were reducing from cost of acquisition. After 1/4/2014, it is fully taxable. You can copy. Take your time, copy. Right. So advance money forfeited on or after 1/4/2014, how much? Yes. Guys, next. Compensation if you receive on, write down next one. Compensation received on termination/modification. Compensation received on termination/modification of employment. Compensation received on termination/modification of employment from non-employer organization. From non-employer organization. So, guys, you are already employed in one company. The other competition will come and tell you leave that job and come. I will pay you 10 lakh rupees, like joining. Before you join only, that bonus I'll pay you. Now that amount. Are you already an employee? No. If you are an employee and if I are giving you bonus, then it is salary. But to leave there and come here, I am paying you some money. Now that will be charged under what? IFOS, income from other sources. Income from other sources. Then there was one section 5627B that has been deleted now. No problem. So if you see here, there is one section I'll show you. All these things are there. This winnings from lottery online game, we will again discuss in TDS. You'll understand. This one, guys, 9.18. Taxability of share premium in case of closely held company. This is abolished. So it is not in syllabus now. With effect from 1/4/25 means which year? Assessment year 25/26, which means financial year 24/25. It used to be called as angel tax. Angel tax is now abolished. No longer there. family pension, all those things. Next one, guys, section 57, allowability of expenditure. Section 57, allowability of expenditure. Two headings you can make. One is income, one more is expense allowed. One is income, one more is expense allowed. Income, one more is expense allowed. So rent, guys, rent paid 60,000, subletting 70,000. I can do that. I can pay rent 60,000. I can sublet it for 70,000. Income is 10,000. Now, what is the income totally of subletting? 70,000. But what is the expense? 60,000. Is this 60,000 allowed? Yes, obviously. So you can say fully allowed. Rent paid 60,000 per month, subletting 70,000 per month, income 10,000. Fully allowed. Exempt income, agricultural income, we can ignore. Guys, when I am getting agricultural income, expenses is allowed or not? No, ignored. Income only is not taxable. Why will I pay expenditure? So hence it is ignored. Expenses were ignored. You are writing it on the expense side. Expense should be ignored. Any winnings from lottery, expenses not allowed. Will you claim tickets? No. Ticket cost? No. Winnings itself is taxable flat rate 30% without any expenses. Interest from late compensation 50% standard deduction. Winnings not allowed. Interest from late compensation 50% standard deduction. We know that. Interest from late compensation 15% standard deduction. Next, guys, dividend, income from UTI, Unit Trust of India, income from mutual fund, all these things. Guys, can I take a loan and invest in the market? Yes, there if I'm getting return of 20% and interest I'm paying loan 15%, 5% is still my income. Reliance did the full deal through this only. All these years they made money by borrowing and investing. Not in the market. They borrowed and invested in businesses which gave them 25% return. And what is the interest expense? 15%. What is their profit? 10%. They're very, very smart fellows. Recently they wanted to buy Cisco's some undertaking. They approached. The deal was some, let's say, 100 crore. They went to Cisco's lending unit, took money from Cisco only and bought that company. That's what they do. Brilliant, right? Brilliant. That is what is always done. I'm not joking. From day one, they've always borrowed, invested, had faith that it will receive more money than the investment. Balance is their profit. So now tell me, can I borrow money and invest in the market? Yes. The question now is, how much if I'm earning 20%, but my interest is 15%, how much is allowed? So that was a question. What people were doing now, very smart guys. They were earning dividend, etc., 5 lakhs. They didn't want to pay tax on that. So first they said loan, interest on loan, 2 lakh. I've appointed a salaried person to do my accounts. For him, the salary for the entire year is 3 lakh. So 5 lakh minus 5 lakh, income 0. That's what they were doing. Nirmala madam said nothing doing. So she has now told only interest expense and that too up to 20% of the dividend income only is allowed. You are paying 15%, I don't care. 20% of the dividend income. What's the dividend income? 5 lakh. How much interest you are paying? 2 lakh. 2 lakh is not allowed. How much is allowed? 20% of 5 lakh. That is 1 lakh. Are you understanding, guys? 20% of the dividend income is only allowed. You may be paying you may be paying interest of 2 lakh to the bank. Not allowed. How much is allowed? 20% of the dividend income. So write down. Dividend or income from UTI, Unit Trust of India, income from mutual funds, only interest expense and that too only 20% of dividend income or income from mutual fund is allowed. Right? So you see, loan 1 crore, interest rate 15%, interest per annum 15 lakh. Dividend income is 12 lakh. Is 12 minus 15, will you take 3 lakh loss from other sources? There is no scene called loss from other sources, guys. Is there? LFOS? No. So how much is allowed? Only 20% of 12 lakh. That is 2.4 lakh only is claimed. Remaining 9.6 lakh I need to pay tax. You can copy this. Correct. So, following expenses are not allowed, guys. Following expenses are not allowed. Which one? You see, personal expenditure not allowed. I'll explain, then you can copy. Interest or salary paid outside India on which TDS is not deducted. Remember in section 28, in section 40 small a 1, 40 small a 1a 2a, we saw outside India TDS has to be deducted. If not deducted, 100% disallowed. Domestic fellows, 30% disallowed. We have done it in PGBP. So that is this thing. Interest salary paid outside India on which TDS is not deducted, fully disallowed. Any expenditure paid to resident person, 30% disallowed. Cash expenditure more than 10,000 in single day to a person, disallowed. Expenditure related to casual income, that is winnings from lottery, winnings, disallowed. 40A2, payment to relative, unreasonable expenditure, disallowed. We have discussed all that in PGVP, same thing in 58 also, copy. These are the expenses which are not allowed. That's all is IFOS, over.